And we are live. Hello, everybody, and welcome to Binance Online. So today is finally the day. Binance Online is officially here, and we are so excited to have all of you joining us live from around the world on Binance Square, on X, and on YouTube. Now, what makes today feel so special is the fact that this is really a global moment for our community. So wherever you're tuning in from, everyone is experiencing these conversations together in real time. And it was really important for us here at Binance to bring you all the same front row seat to the biggest conversations that are happening in crypto right now. We actually have a record-breaking over 50,000 pre-registered for this event on Binance Square alone. So a big hello and a big thank you to everyone that is joining. We have quite a day in store for all of you, and we're going to be sharing some more details shortly. So over the next few hours, we're going to hear from some of the most influential voices from crypto, from market outlooks and regulation to AI, tokenization, payments, and the future of financial systems. We're diving into where this industry is headed next. Today, we also have a special release happening across the Binance channels with a brand new Humans of Binance episode happening today. This series is something that we're incredibly proud of because it really does shine a light on the people behind the industry, the builders, the creators, the teams, and the community members who make Binance what it really is. Now, crypto has and always has been about people first, and we're so excited for all of you to see these stories. Now, I'm going to give you guys a run through of exactly what we have in store today. Let me just share my screen because for those of you that have seen the blog and the agenda already, you'll know that it is pretty crypto star-studded. So let me give you a little walkthrough of what we can expect. Now, as you guys know, the stream will be going on consistently for around 4 hours today. We're going to be kicking off, first of all, with E and Richard in just a few moments on the roadmap of 300 million to 3 billion users. After that, make sure to not go anywhere. We have Lily Liu, Brad Garlinghouse, and Richard Teng on the evolution era, the next phase of crypto. And after that, we have a star-studded panel on where the smart money is moving and where capital flows are moving now with Chamath, CZ, and Anthony Pompliano. That's definitely one not to miss. Then we have a message from our community, as I mentioned, Humans of Binance, a message that's really dear to all of our hearts here at Binance. And then we'll be hearing from Nina Rong from BNB Chain. Nina is actually going to be pulling in some live questions from the audience, and I'll be pulling some of those from X. So if you do want to hear from Nina, you do have something to ask, make sure to head over to X and just drop her a message, and we'll be going through those comments shortly. And then we're looking into crypto trends from the leading content creators, which are Guy and Nick from Coin Bureau. Coin Bureau have 2.7 million followers across their YouTube channels, and they're one of the largest following crypto educators in the industry. So it's really key to hear where they're looking at trends moving forward. And then next up, we're looking into research. As we say in crypto, DYOR is so important, but what about building your own research? Building your own research frameworks using AI and also using some of the data sets available. We'll be hearing from CoinMarketCap, from Masari, and also from DeFi Llama. And then next up, we're rounding things off with Adam Back, who is probably the most cited person on the Bitcoin white paper, a true visionary and cypherpunk, someone that you absolutely do want to hear from. And he'll be talking about why all of us in the room and all of us holding crypto are all Satoshi. And then we'll be hearing from Thomas Gregory, the VP of Payments and Fiat over here at Binance, and Ella from Easy Labs. And then we'll be rounding things off with the finale session of our very own Chief Financial Officer, Kaiser, with the Chief Operating Officer of BlackRock, Rob Goldstein. So as you guys can see, there is a star-studded agenda. There is a lot going on and there's a lot of content. So I hope you guys enjoy. But before we kick off with the first session, I do want to give an extra hello to everyone listening on Binance Square. If you are listening live, a very big hello. A little fun fact, we'll be dropping around 10,000 USDC in red packets throughout today's stream. And the rewards will get bigger as the event does go on. So make sure you stay through until the very end. And before we kick things off, a very big thank you to everyone that's here joining us today. Wherever you are joining on in the world, we're incredibly excited to share the day with you. So let's get started. First, it's time for hear from our co-CEOs, Richard and E, on the road to 3 billion users. Well, it's time for our very first session on Binance Online. A huge thank you to everyone that is joining us from around the world. We're starting off very strong with our two co-CEOs of Binance, He and Richard Tang, on the topic of 300 million users to 3 billion and the next phase of Binance. Before we begin, a huge thank you to our community who have submitted the questions for this AMA. We've received thousands of responses from users around the world and some really thoughtful and frequently asked topics that we'll discuss today. So first of all, Richard, thank you so much for joining today.
Thanks for having us.
Hi.
Great to have you both. Thank you so much for taking the time. So we have a range of questions that have been submitted from the community. So I'm going to jump straight in and ask you both. And will start with you. The first question that we have is, from the outside, Binance looks like it's changed significantly over the past few years. What is the change that most people on the outside can't see, but that you feel most proud of?
So first of all, I think from outside, probably you feel, oh, Binance user rise a lot and achieve 300 million. But for our internally, I think the biggest change definitely that's organization structure much powerful. I believe everything that's from a right people, right? So if you have a right talent density, you can rise your user size, you can have a more business developing, that's normal. But everything that's because you have a really strongly organization structure, have a right people, as a Richard is a co-CEO with me. So the second part, I think is a big change and really stronger is a Binance culture. I think we keep our DNA part, and in the same time, we are really looking for improve our compliance culture. In the same time, we still hiring a lot of fantastic people join to our group. And the last piece, definitely, I think from external, people feel, oh, it's bear market, it's terrible. But we can see the industry day by day stronger, and people not just look at trade. And in the same time, we can feel the blockchain tech actually deep involved to TradFi world, and TradFi actually cooperation with crypto industry. We are together.
Fantastic. Thank you. And Richard, over to you with the same question. Which change can you say that you're most proud of that maybe people from the outside watching Binance haven't seen?
I think most people like what Yi say, right? So Yi is a co-founder. She has seen the transformation of Binance. I joined only in August 2021, right? But even from then till now, I've seen huge transformation. But even before I touch on the changes, I'll touch on the important conscientious decision that Binance leadership management make on a day-to-day basis, which is to maintain the DNA of Binance, which is extremely important, right? So keeping Binance user-focused, user-first organization, being very hardcore, being very collaborative. And those are the unique DNAs that continue to make us successful. So I think it's important to keep all those elements. But as Yi mentioned, right? So if you look at the talent density, we have transformed. If you look at the organization structure, we have transformed drastically. We have pivoted very strongly to become a global infrastructure. We have pivoted very strongly to be the most regulated exchange globally on that front. And we need many more talents across both TradFi, regulator functions, control functions, and of course, all front office functions, from marketing to our business development, etc., etc. And that is very exciting to see. The company continue to keep its core DNA and strength, at the same time being able to pivot and become something that continue to grow multi-jurisdiction, multi-asset class now.
Great. And when compiling the questions, we had so many questions in terms of adoption for Binance and also for crypto and next steps. And you both have mentioned that Binance has 310 million users today, but has set the target of 3 billion users. So I would love to start with you. What needs to happen to get to that 3 billion user milestone? And do you have a timeline in mind?
So when we talk about 1 billion user target, that's the first year. In that moment, when we talk about 1 billion user, everyone feels that's crazy. But look, now we have a 300 million user already. So 1 billion is a clearly goal. We can achieve that. So for this reason, we set a much aggressive goal at the 3 billion. The reason is that I think if you want to be best company in the world, you should be think big, you should be think crazy. And when you set up like a really big goal, and your whole team will think how to achieve bigger goal, right? 3 billion, that means not just exchange. That means we are basically financial infrastructure for the world. If we look at the history, we achieved 100 million users, took us 5 years, right? So the next 100 million took 2 years. The next 100 million took 18 months. So for this reason, day by day, we can say the world is improved so fast, innovation so fast. We should be have a more tech innovation. We should be serving more and more retail user and really help their life better. We should be finding more way to net the world much, much better. So I basically feel think big is like a basic goal for top tier company.
Absolutely. And Richard, the same question to you in terms of the 3 billion user milestone. What needs to happen to get there? And do you have a target in mind?
So kudos to E, right? The 3 billion was E saying that, look, we need to aim very high, we need to be ambitious, and we need to serve our users much better. So you can see that's the result of how the 3 billion users come about. But I travel the world quite a fair bit, including to many frontier and emerging markets. And I see even today, 1.4 billion people are excluded from financial services globally. And that is something that we need to solve. And crypto is here to solve that problem. That's why we are very passionate about freedom of money globally. So those are things that we continue to push for. And with that in mind, we need to then continue to run faster, other than user protection, which I mentioned. How do we make sure that we become a multi-asset class, multi-jurisdictional platform, right? So as you can see, we brought a lot more new products throughout the course of this year, from precious metals to petrochemicals to stocks trading, etc. And by allowing for 24/7 trading, the institutions, the retail love it because they can manage risk much better compared to traditional platforms. They can hedge their exposure. They can take positions as and when news flow come in. So those are things that we continue to improve upon in terms of global platform and rollout, but also on the regulatory front, right? So we are the only exchange globally to have a home regulator that regulates us end-to-end basis by the FSRA in ADGM. And we are the most regulated exchange with more than 20 over jurisdiction that's regulating us, right? So as we get more and more clarity, we can support a lot more users globally on that front. So very, very, very excited with that target. It forces us to really think outside the box on how to serve our users much better.
Thank you, Richard. And E, over to you. So we've had a lot of the community ask in response to your 3 billion user milestone when it comes to the next step for Binance and Binance becoming the financial super app and a single platform where people can manage their entire financial life from social all the way over into financial. And it seems like there are other platforms from traditional banks all the way through over into exchanges that are also chasing this vision to some degree. What makes you so confident that Binance is really going to win the race, and what, if anything, keeps you up at night about moving forward?
So I think if you ask me something, name cannot sleep well every night, I feel that's probably about the talent density. So you can say Binance always keep hiring. I think if we can find the right people in our group, if we can have more innovation, we definitely can drive the financial future. We are very focused about the financial super app. That means let more normal people have a better financial service, not just has some like a really professional investor or like institutional user. That's including some people as a nanny, as like some people in this world don't know what is money, don't know what is the financial service part. And in this moment, we cover more than 100 countries already. We have like a 300 million user. If you ask me is that enough? I think that's just a beginning. I think a lot of financial service company, they really wanna help more like a professional investor. They care about like how much did they earn. But for me, I think that if we can build some platform for the world and let some normal people live better, that's our goal.
Thank you, E. And Richard, the next question that we have submitted from the community is over to you regarding regulation. So the regulatory environment for crypto has improved in many ways, but Binance still faces some scrutiny in various jurisdictions. So as someone that comes from a regulatory background, how do you deal with that? And also when it comes to any gaps where you see in regulation from now where we are to where we need to get to?
So I used to sit on the other side of the fence for decades, right? So I do think that for regulators and for responsible players like Binance, the interests are aligned. Is to come out with sensible regulation, is to protect users on that front, and is to safeguard the ecosystem, right? So our interests are aligned by and large, right? But the challenge globally today is that you see crypto regulations are still in the formative stage in many different countries. And in many other countries, there's a bit of confusion, right? Is it a commodity? Is it security? Is it defined as a unique virtual asset? And how do you regulate that? Unlike the banking space or asset management or security space, where the rules and regulations are consistent and pretty uniform throughout the different parts of the world, the harmonization of rules for crypto sector, I think, will take many, many years to come. So as global players, it's challenging for us every time we want to do a local deployment. We have to adhere to different set of rules, different frameworks. We have to tweak our domestic operations to comply with those. So it continues to be challenging. So what we do hope for is much greater harmonization of rules for the crypto sector to bring about much better clarity for mass adoption to take place and for better trust to take place, right? So there are still challenges. So that's on the external side. And as far as possible, we try to play our part in terms of giving inputs, in terms of policy formulation to come out with smart rules. But then internally, we have done a lot, right? So you can see that we have invested very heavily into the area of compliance. Now close to 1,600 staff are in compliance, constituting more than 20% of our global headcount. And we spend millions and millions of dollars, including utilizing AI to make it much better in terms of effectiveness and efficiency. So internally, we will make compliance a competitive advantage in the future world where a lot of institutions and retail are looking at very compliant platforms like yourself. But externally, we are price takers. So we have to do our best to really shape the policy that comes our way.
Great. And the next question that we have from the community is the one big bet. So if each of you had to pick one thing that you really believe in strongly for the next 5 years, something that most people might still be sleeping on, what do you think it would be? And E, if we could start with you.
So I think definitely that's AI, and I think everyone talk about AI in this moment. But for me or for Binance, that's more about how to use AI bring to financial service industry. For my personal opinion, it's a simple logic. That's more about use AI to help our user feel financial equality. Let me give an example. A lot of people, when they begin to invest, they just follow their friend's guide, buy or sell. Sometimes they don't know the reason, but if we can bring AI in, and even we can let some people use it to do some quant trading, and that's definitely will help some retail people, normal people have a much powerful skill.
Absolutely. And Richard, over to you. The one big bet that you believe in strongly for the next 5 years, something that you think some people might be sleeping on, what would it be?
I'm not smart enough to do that. But as he mentioned, I think the intersection of AI and blockchain, it will be a very, very interesting space. Personally, I'm also quite interested to see how the intersection of wellness and blockchain plus AI will come about, right? Because other than AI technology and blockchain, I think the other thing that people will focus a lot on will be whether it's physical wellness or mental wellness, right? So how that intersection can come about will be something interesting to watch out for me.
That's great, and very good for people in crypto as well that spend so much time at a laptop. Final question to both of you and next steps in terms of events for the industry. Bitcoin Pizza Day is coming up on May the 22nd. So we have to ask, and E, we can start with you. What was the first thing, if ever, that you bought or paid for or did with crypto? And is there any interesting stories behind it?
So because my all assets actually crypto already, in this moment, definitely my all payment is use Binance card or use crypto, you can say. But if you ask me the early stage, first time I feel we can directly use crypto to pay or like help people. That's probably the first year I joined to the industry. It's 2014. And in that moment, we have some like a crypto delay and use that to help some people have a cancer in community. But in that moment, I feel the crypto not just something let people trade it. Actually, that's still one more way to let people feel it's a part of a support from community.
Yeah, absolutely. A support for the community and a way to get funds quickly and accessibly to people. Richard, over to you when it comes to first time interacting or spending crypto.
My first usage of crypto is transfer funds, right? That's my first usage. My first payment is buying honey in the Kingdom of Bhutan. So there you have it. We support payment in the Kingdom of Bhutan as well. So I wanted to showcase that.
Fantastic. Well, E, Richard, thank you both so much for joining us and for answering some of the community questions during our first Binance Online. Such a pleasure to have you both joining. So thank you both so much for the time.
Thank you.
Thank you. Thanks, everyone.
Thank you. A huge thank you to everyone that has joined. And just to know, in just a few hours, we will have Nina from BNB Chain that will be joining to answer some questions live. So if you enjoyed asking Ian Richard some questions, make sure to head over to Binance X account and submit your questions for Nina. See you soon. So from 300 million to 3 billion users. And also as a very fun fact, we had 300,000 of you tune in the first 10 minutes of Binance Online on Binance Square alone. So a big hello to everyone that's joining on X, on YouTube, and also, of course, on Binance Square. If you are joining on X and YouTube, we would advise you to head over to Binance Square. And the reason for that is we do have $10,000 of USDC to give away in red packets throughout the live stream. Now, just as a note, I will be giving a heads up when there are specific panels where a red packet is coming your way. For example, our next panel, we will have a red packet giveaway on the next session. Once it goes live, there'll be a 2-minute timer. All the claims are first come and first served on Binance Square only. So make sure you're quick and keep a very close eye. And I'll keep my fingers crossed that you are one of the lucky winners. We have plenty throughout the day, so do make sure to stay tuned. Now, up next, it's time for our next session of the day. If you were with us in Dubai for Binance Watching Week 2025, you will have seen these 3 speakers on stage together before. We have Brad Garlinghouse from Ripple, we have Lily Liu from Solana, and we have Richard Tang from Binance, moderated by Robert, head of multimedia at Cointelegraph, discussing the next evolution of crypto. Let's take a look at what they have to say.
How free are you? Think for a second. We tend to think we are, but are we really? These guys? What's yours? It's theirs. They control it. Your money, the fees, your data, and how you use it. Truth is, they own you. You and your story. Your hopes and dreams. Sad, right? But here's the good news. Welcome to Web3. Your story is yours and yours only. So go on, claim back what's yours.
Hey everybody, this is Luke from Pixels. You might remember us from 2024 when Pixels blew up and put Web3 gaming back on the map, but honestly, we were also a part of the problem. We had massive growth, we had a ton of players, but like most play-to-earn games, we were still giving out way too many rewards without a clear enough understanding of what was actually helping the game economy. So for the last couple of years, we've been focused on one thing. Can we actually make play-to-earn work? And after years of data, experiments, and honestly a lot of hard lessons, we actually got there. Pixels is now sustainable and profitable. And that breakthrough came from Stacked. Stacked is the platform that we built from everything that we learned running one of the biggest play-to-earn economies ever. And it uses real historical data from Pixels so that we can actually reward people who create value for the ecosystem instead of extracting it away. So now we're bringing that same system to more games, and it's all under the Pixel ecosystem. Here's what it looks like.
Zero-Base use real-time zero-knowledge proofs, transforming uncertainty into verifiable truth. With real-time zero-knowledge proofs, every computation becomes independently verifiable, transparent, and traceable. Built for institutions with full auditability, privacy by design, and compliance-ready architecture. Trusted by leading exchanges and partners worldwide. The cryptographic trust layer for global finance. Zero-Base, making capital flows verifiable.
Okay, well, welcome guys. Thank you so much for joining us, Brad, Lily, Richard. So you guys did a panel very, very similar to this in December at Binance Blockchain Week. And look, I don't need to tell you guys, we live in an extremely fast-moving industry. So I want to talk a little bit about what's happened since December. Richard, I'll start with you. One of the things that stood out to me and that I've spoken about on my show quite a lot is stablecoins, obviously. But June Analytics found that there had been $10.5 trillion worth of stablecoin transfers in January alone, which is just staggering to me. What do you make of the trajectory that stablecoins are on?
Well, I think it's at an early stage. I do think that the path of trajectory is going to continue to grow much stronger going forward. The reason is this, right? If you look at traditional financial infrastructure, it is very archaic by today's standards, right? So if you try to redesign a new bank or new model of payment, you wouldn't base it on the existing infrastructure. It's very archaic, it's slow, it's very costly, right? A stablecoin represent what is possible. You can do transfer cross-border on an almost instantaneous basis at a fraction of the cost. So if you look at the clarity that's provided by the Genius Act, that gave faith to a lot of financial institutions, a lot of corporates to then start embracing it and use it as a mode of payment and transfer globally. And I do see that corporate treasuries around the world are also using this now and increasingly embracing this, because from a capital efficiency standpoint, so much better. You can have certainty of when the money will reach your subsidiaries, your affiliates, your vendor. You take almost instantaneously instead of 2 to 3 days. You need to hold much less capital and there's much greater capital velocity. So I think we are still at the early innings of this.
Yeah, I think so. It's remarkable how fast it's grown from just a few years ago, where it still felt kind of niche, and now it seems to be underpinning so much. Another narrative that has stood out to, I'm sure, all of us is RWAs, which again has been long forecasted that would be the case. I remember seeing a Chainalysis report last month which showed huge growth in RWAs, and interestingly, they noted that the number of wallets that were only created to hold RWA assets had spiked in the last year or so. Lily, when it comes to Solana, how much are you focused on RWAs? Is that a big narrative to you?
For sure. So first of all, I think RWAs is an enormous category. Depending on how you count and who you ask, it represents 100 trillion, 500 trillion, maybe even more in terms of kind of value of the asset class today, because it essentially is a shorthand term for everything that exists in all assets in so-called TradFi. But I think what's interesting about blockchain is, look, any technology, you've always got to be creating or opening a new market. And so where we're going to start as an industry is onboarding these RWAs onto a blockchain. And that's, tokenization, something that we've all become very familiar with and see the potential of that. And then beyond that, as we kind of look beyond, okay, well, once you take an existing asset, put it on chain, what's next? I think what's next is around, well, what new financial markets can you actually create? And so I think that's going to be a combination of creating financial assets out of markets that don't sort of exist at scale today. So those could be around compute markets, energy markets. Those two are obviously very top of mind given everything that's happening macroeconomically and in relation to the AI boom. And I think another one that we're really passionate about is why we talk about internet capital markets is the ability to bring capital markets access to the 180 countries in the world that don't have capital markets at any real scale today. And so I think that there's just so much, when you really think about what the impact of that is in terms of expanding financial markets access at the company level and really even at the country level, I think that there's a lot to imagine there.
Yeah, absolutely. And I think this is something Brad mentioned in the December panel, where crypto's now starting to solve real problems. And before, I think it felt a little bit like in the early days of crypto, we were trying to create markets that perhaps weren't a great fit. And now it feels like we're actually solving a lot of problems. Brad, I do want to come to you. Has anything stood out to you since December in terms of growth?
Well, I suppose a couple of things stand out to me. I mean, one, I do think having some increased regulatory clarity helps. And although nothing has substantially materialized since December, I think the longer you have things like the Genius Act here in the United States baked, it unlocks, as Richard was describing, in the stablecoin market, it unlocks usage and demand that wasn't there before. And then even as Lily's describing, there's a lot of these big players who are leaning into real world assets, RWAs, as we've talked about here. And, I think that wouldn't happen without kind of some of that unlock. And look, the market's still maturing, and this is still kind of a drop in the bucket. But the crypto markets, I think, and the blockchain-based assets are more equipped to handle the value movement at the scale of traditional finance today than was certainly true 5 years ago. So, and then the last thing I'll throw out on this point is I do think we are still kind of emerging from, the reputational damage that, whether it was Terra Luna, FTX, and I think that the more time that goes by, crypto is increasingly not, it's an exciting word again for traditional finance and banking circles.
That's a really interesting point. And Brad, I want to stay with you on that, actually. I think the evolving relationship between TradFi and crypto is fascinating to me, particularly because of where crypto came from and TradFi's initial resistance, or a lot of TradFi's initial resistance to the industry. And I think when I got back into the space for the first time, I think back 10 years ago, crypto has really gone from this industry that few would publicly touch, at least. And now there's this sort of merging of the two industries. What do you think facilitated that then? Is it this sort of reputational issue that was just sort of holding it back, or did the technology need to mature?
I mean, I think it's kind of all of the above. It's not just one individual event, but I do think there are more and more clear signals that TradFi is coming for crypto in a really positive way. You saw very recently Morgan Stanley, I think, very deliberately undercutting competition in terms of pricing. They obviously have a massive customer base, and I think demonstrates they're thinking about the long term. It's, I think, widely reported that their Bitcoin ETF was their most successful launch ever. So I think crypto native companies like the companies on we're talking today, we've done a lot of the hard work and working through the regulatory uncertainty, proving out the market. But as you pointed out, in December, we did talk about we can't just be an industry that is about speculation, or certainly not meme coins. And we're increasingly finding how these technologies applied to traditional financial markets are improving efficiency, reducing cost, improving speed. And I think TradFi is moving more quickly than ever to kind of meet the moment now that, now that guidance and regulatory dynamics are becoming clear, and the winners are going to be the ones who own underlying infrastructure. And I think TradFi sees that and is acting more quickly than ever before.
Yeah, this is an interesting point, and I want to come back to Morgan Stanley actually. So for anyone that doesn't know, they've debuted crypto trading, and importantly, they've undercut competitors on fees. And Richard, I want to put this to you because I had Stephen Gregory, the new Binance US CEO, on my show last week, and it occurred to me that exchanges are in a situation that I hadn't really considered before. And it seems to me, and I'm really asking you, are exchanges competitors still other exchanges, or are you now having to fight the titans of TradFi as well?
Well, the first point I wanted to make is that competition from the likes of Morgan Stanley is a validation of how far crypto has come, right? So it's a good thing on that front. If you throw back to, as you mentioned, 10 years or even 5 years ago, the majority of TradFi firms think that it's going to be a passing fad. Some have the narrative is a scam until very recently, and nobody is near this space. Now they are competing for it. So in itself, there's a profound shift, and it's happening because this asset class is maturing. The industry has proven itself is very resilient. So I think it's something for us to celebrate. I do think that there are differences between what the TradFi firms are offering, which is largely a wrapper around crypto assets, and what we are offering in terms of native infrastructure, deep liquidity, and a full product suite together with 24/7 market. But for us, what we are focusing is the next billion or next 3 billion users, right? Not the existing ones. The conversation that we are having today, we continue to need to focus. Lily mentioned this just now. There are so many people around the world with no access to capital markets, to the banking sector. Even as of today, 1.4 billion people are unbanked globally. They has to pay a very high remittance fee because of the lack of banking infrastructure that's absent from them. So we will continue to push the agenda to serve our users wherever they may be. And I do think that structurally, infrastructurally, we are very different. But at the same time, we are partners as well. So we work with the likes of Franklin Templeton, BlackRock, on tokenization capabilities, on custody infrastructure, and all these add-on, right? So I do see a convergence between the two spaces. And just even on Binance, we are no longer just focusing on crypto. We are multi-asset class exchange, multi-jurisdictional exchange. We have offered things on precious metals trading, petrochemicals, US stocks, etc. So we'll continue to see that convergence going forward.
Richard, just to follow up on that, I mean, it makes sense that you will always be looking forward, right? And bringing the next billion people into crypto. how different is the next billion of people compared to perhaps the first billion of people?
Well, I think for the early adopters, many of them are crypto native, they are true believers, and hence the first 3-5% of people coming through may not need clarity on things like rules, frameworks, institutional embracement, etc. But for mass adoption to take place, I always firmly believe that we need to come out with much clearer provisions on rules so that users can trust them more. They know what sort of framework crypto players are operating within. They need to see institutional corporates adoption before that mass adoption will come through in a big way. And in many sense, we are still very early in that stage of adoption. We went from 1% to about 7 or 8% now currently, quite quickly. But the path forward, given all these institutions now coming through, embracing it, whether it's in terms of stablecoin, payments, RWA, etc., I think is positive and is a sign that the next wave of adoption will come through in a very aggressive manner.
Yeah, absolutely. Lily, I want to come to you. On these institutional partnerships that we're seeing, Solana has obviously attracted a lot of the big players already. What's the next step you'd like to see Solana take with sort of TradFi institutions?
I think that there's two parts of institutional adoption. There's always the asset side, and there's also the infrastructure side. And so both of those are happening right now, where folks are issuing assets on a blockchain. And I think that there's also an exploration of using blockchains for accelerating settlement into 24/7 cycles and reducing the amount of time it takes to actually complete more complex transactions. And so I think both of those areas, I think, if we think that it's been a big trend today, there's still, I think, collectively as an industry, we're a few $1 billion, maybe $10 to $20 billion of RWA is actually distributed on chain. And there's hundreds of trillions of dollars of assets that exist in TradFi that potentially could be more projectively deployed, more efficiently deployed, more be used more capital efficient ways, and also sort of more around the clock if they are on a blockchain. So I think that there's that, just even expansion into the existing pool of traditional finance assets. But, as we were saying earlier, I think one of the most exciting things always is, what new markets can you create? What are you going to do which is new, above and beyond what you can do in the existing kind of financial system? And I think that's really about creating new asset classes, bring liquidity to new types of assets or new sources of assets. And one thing that's very top of mind for me is, it's no secret that the physical world is kind of back to the future in terms of the world is a lot about physical resource right now and physical kind of capex and physical implementation. It's all about minerals, resources, chips, data centers, and energy. And so after 25 years of being very oriented towards technology and software and capex light models, now there's a return to capex heavy models for obvious reasons. And so I think there's a question around, how do you enact capital formation around that? And if the job of a financial kind of system and financial institutions is to help enact capital formation, what is the unique role that we as the blockchain industry can play within that? And so I think that's going to be, part of what Richard was talking about is this convergence. And the convergence is not going to just be in kind of what exists in the existing world, but it's also going to be how do you take this new fundamentally financial infrastructure and use that to actually create new markets, create better markets.
Yeah, that's interesting. I think one thing that underpins all of this is something that Brad alluded to right at the start, which is regulation. That it is certainly propelling the industry forward, particularly when you look at, and I think Brad mentioned this in December, when you look at the contrast between sort of the Biden administration, where crypto is very much held down, and now it's being pushed forward, which is remarkable for the industry. Now, Brad, you recently said, I think you said in Miami, that the next few weeks are crucial for the passing of the Clarity Act. Could you talk a little bit about why that is, and do you think we're close to finally getting this over the line?
Yeah, look, I'll start by saying I think getting global regulatory clarity, particularly in the kind of some of the major financial centers, has been something that's held back this industry. And I think, it's not a surprise to see, places like the UAE attract capital, attract talent, because attracting the Binances and even Solanas of the world, because there has been regulatory clarity there. And that's been good for their economies, and that's been a very good thing. In the U.S., the good news is we're as close to the finish line as we've ever been. There's actually a markup scheduled out of the Senate Banking Committee tomorrow morning, and that is something we really haven't been this far along. We were very close to the finish line in January, and Team Coinbase expressed some concerns and walked away from the table in a kind of very public fashion. But when you create a vacuum in Washington, it gets filled. And what happened when that occurred is a whole bunch of people over the last 3-4 months since Coinbase kind of stopped that progress. A lot of concerns came in, and both from banking and other industries. And the frustrating part is this industry has been fighting for this moment for years, and so a lot of progress has been made. In the shift from the Biden administration here in the United States to the current administration has been a dramatic positive shift for the industry. But I'm very hopeful, and I'm frankly quite optimistic. I think these prediction markets have the likelihood of around 70% of this passes this year, and so I think we may see President Trump sign something before the end of the summer. And I've been saying that for a while, and so far it looks like maybe I'll be right.
If that is the case, and we do see it finally go over the line, what do you expect to see after that? What do you expect to see in terms of changes and reactions?
Robert, I think this is a really important point, because what I think people misunderstand is it's less about what's listed on various exchanges around the world and is something a security commodity. It's that the big financial institutions, particularly the ones here in the United States, that have leaned out, and they've leaned out because they don't know if the next head of the SEC, despite good positive guidance from this SEC, was a very constructive partner that is protecting consumers but also unlocking innovation in the chairman, Paul Atkins. They don't know who the next one will be. And the banks in the United States have had enough experience and long tenure to know that the next head of the SEC might be more like the last one, which was very aggressively attacking and frankly seeking to kill the industry in the United States. And so this is an unlock to bring some of the largest financial institutions that have leaned out and been paused. I think with the Clarity Act, you'll see them leaning in a way we've never seen before. And some of the names that have started to dabble, Richard mentioned Franklin Templeton and BlackRock, they are leaning in, but as a percentage of the capital they have available to them, it's still tiny. And I think that this is an unlock for that. Wow.
Actually, that brings me to Richard. I don't know if you remember, but you were on my show just between Christmas and New Year last year, and I was trying to obviously push you for predictions for headlines, and you were mentioning that you expect governments and public institutions to engage more with crypto broadly. Do you think that also hinges on regulatory clarity?
Yeah, definitely. So, well, it's not a prerequisite for governments, for sovereign wealth funds to engage in crypto without clear regulations. Regulations certainly will accelerate and is a multiplier. So I agree with everything that Brett has said, right? So, and if you look at what happened in the US under the last administration and this administration, it's such a stark contrast, right? Under the last administration, a lot of good crypto firms, developments start to flow out from the US because of that, anti-crypto environment. Whereas under President Trump, is really supporting crypto development, and you see a lot of new developments coming out from the US, again, a lot of new investments. So it's a prime example of what can happen where you give clarity to the marketplace. Again, what happened to stablecoin adoption after Genius Act, I think is a case in point. And it's not only prompted institutions to act within the US, but it prompted international regulators and policymakers to formulate their own stablecoin, right? To make sure that they keep pace with what's happening in the US. Hong Kong issued their own stablecoin and stablecoin licenses recently. So all those are big push in the right direction. And hopefully the Clarity Act that will come in the US, as Brad predicted, will not only spur all this new innovation, new investment, new deployment by both crypto industry and traditional finance industry in the US, but globally. So we're very hopeful on that front.
Yeah, absolutely. I mean, the US does act as a pace setter for a lot of this stuff, and it makes sense. It represents an enormous chunk of the global GDP. But that's not to say that the other jurisdictions haven't already been proactive. Plenty of them have been. Lily, when it comes to US regulation, how important is that to what Solana's doing?
It is hugely important because the United States is about 15% of global GDP, but then between 50 and 60% of global capital markets. And so just given the dominance and influence of US on the global economy, many people will look to the United States for guidance, and not just in sort of a spiritual sense, but then the ability to actually participate in this in a blockchain world, because ultimately at some point it still hits the fiat banking system, which the United States obviously has a lot of influence into. And so something like the Clarity Act, I think, is so foundationally important because, as Brad was pointing out, we came from a very hostile administration from 2020 to 2024. Now it's a very crypto-friendly administration, but in the same way we had a sea change a couple of years ago, you can have a sea change again. And so having legislation now that codifies regulation and what is regulation, and regulating through regulation rather than regulating through enforcement is a really important thing for us to get right now. And what we've seen is that, you know, what happened after Genius Act is it certainly unleashed, for example, the whole payments industry in the United States, where people saw stablecoins as being important, as being a really foundational upgrade in terms of how you move money around the world. But a lot of folks were hesitant to kind of jump in until you had the clarity, no pun intended, around the Genius Act. And I think the Clarity Act would do the same for kind of the non-payments use cases, regulated financial institutions, being able to actually sort of jump into blockchain and you know, from the commodities angle, from trading, from markets, from banking, and if what we saw with Genius was any indicator, I think that would really be truly a milestone for the United States to not just participate, but likely be a leader in this integration of blockchain financial markets and traditional financial markets.
Yeah, absolutely. Actually, Lily, I want to stay with you on payments, funnily enough, and take this to a different emerging relationship for crypto, which is AI. Now, at Consensus, you said that Solana is building payment rails for the AI machine economy. Now, this is a topic I've been discussing a lot lately. It still feels fairly niche, and the volumes are very small. But can you explain a little bit about what that is and why you guys think it's important?
Sure. It's niche because the machine economy itself is nascent and tiny. And one of the theses that we had about cryptocurrency and the problems it would solve actually go back more than 10 years. I think that if you look at the Bitcoin talk forums from 2013, even pre-2013, a lot of the imagined use cases for cryptocurrency and blockchain, they are coming true over time. And one of those ideas was machine-based payments, recognizing the fact that machines are definitionally digitally native. They're the infrastructure of digital systems, and they don't have credit cards. And if you look at how we've constructed payment rails and economic activity around the internet, if you take a step back, it's actually pretty clunky. You essentially have these digitally wrapped credit cards on one hand, And the friction and also, frankly, the expense of doing smaller transactions using credit cards, when in a digital economy, actually the vast majority of transactions are, I guess, what we would call microtransactions. You're not buying coffee, you're buying an API call. And that API call is not priced in the dollars, it's priced in the cents. And so given that, you can never swipe a credit card for a 1 cent transaction. You're just never going to be able to do that. But you could feasibly have streaming payments and be able to initiate payments for something in the cents or tens of cents, and it just kind of opens up that entire set of economic activity, which is kind of priced under, let's call it the price of coffee, that just never happens on the internet today. And so if you think about what you could potentially do with that, I think one thing that would potentially resonate with a lot of people is the ability to, through your browser, to be able to pay to read a single article instead of having to subscribe on a monthly basis. And certainly that's kind of, I think a human use case, but then certainly between AI agents, if you have agent-to-agent commerce or agent-to-agent transaction of any sort, that's just not going to happen through credit card settlement. And the only financial rails that those agents can use between one another are cryptocurrency. So really definitionally, if there's really going to be any sort of agentic economy that gets built, the only way that you can have that economy exist is through crypto. And theoretically, they could pay each other in any coin out there. But in the near term, I am going to guess that's going to be on stablecoins.
Yeah, absolutely. When it comes to AI, I tend to lean, perhaps naively, but towards optimism that a lot of this stuff is going to bring more productivity and growth. But I can't shy away from the fact that there is a lot of doomsday calling when it comes to AI and crypto facilitating that. And obviously we had the big Coinbase layoffs, which didn't help with this. However, Brad, at Consensus, you said painting AI as the boogeyman is a travesty. Can you explain a little bit about what you meant by that?
Yeah, I mean, look, I think it's really unfortunate. I mean, you mentioned Coinbase. There's certainly other examples. Block, or AKA Square, had a huge headcount cut. And I think people are hanging those as directly a result of AI. And I just don't buy that. And I think it's actually bad for AI that that's happening. That isn't to say that AI doesn't create efficiencies. It does. And I think it's going to continue. But, there's also a bunch of examples where a company hasn't really necessarily managed itself incredibly well and is in a volatile industry. And so it's shifting. And so, the example I used when talking about this before is that people used to say the automated teller machine, the ATM, it didn't kill bank teller jobs. Between the roughly 20 years from the time that it was created, there were, call it 500,000 bank tellers in the United States. And 20 years later, there were more after the ATM came along. The iPhone, maybe isn't a perfect example, but the iPhone isn't destroying any jobs. It created entirely new careers. And I think our industry it wouldn't exist without some of these things. Crypto has an opportunity to use this technology, and we are in the Precambrian growth phase. And for Ripple, we look at AI simply as how do we serve more customers to develop more products faster. It's not about, okay, could we cut a few people here, a few people there? But I think the story, as you said, Robert, should be one of optimism and excitement, not of fear and retrenchment.
Amazing. Okay, well, we are fresh out of time. Brad, Lily, Richard, thank you so much for joining us. Really appreciate you taking the time.
Thank you
so much.
Well, we've had some absolutely star-studded sessions to start with. We've heard from our two co-CEOs, Richard and E, on the road to 3 billion users. And then we've also heard from Richard, Brad Garlinghouse, and Lulu from Solana on the evolution era and the next steps for crypto. A big hello to everyone that has just joined us. And thank you guys so much for tuning in to the first Binance Online. We have hit a record numbers of views. And also a big thank you to everyone that's joining across Binance X, YouTube, and then of course, those are listening in on Binance Square. For those of you that are joining on Binance Square, we are dropping red packets throughout the day. These are 10,000 USDC worth of giveaways for you all to claim. And I've been told to give you all a heads up when those red packets come in your way. So the next session does also include some red packets. As the team from Binance Square have mentioned, the red packet giveaways will be getting larger as the stream goes on, and we are 1 hour into Binance Online. So keep your eyes peeled over the next 30-minute session. Keep an eye for a 2-minute timer. Its claims are first come, first served. So make sure to head over to Binance Square and keep a close eye. Are you guys ready for the next session? We're now heading over to Chamath, the CEO of Social Capital, Anthony Pompliana, the founder and CEO of Professional Capital Management, and CZ, the founder of Binance, Giggle Academy, and the author of Freedom of Money, for the session of capital flows, where smart money is moving now. This is a real highlight session. So ladies and gentlemen, do enjoy.
%90 of AI compute, 3 clouds, AI is powerful and it's centralizing fast. Chromia, the relational blockchain built to decentralize AI infrastructure. The only layer 1 with a native vector database, similarity search and contextual memory, all on-chain. Give your AI a brain it can't lose, short-term context, long-term memory, verifiable logs. Built for builders, Python SDK, agent frameworks, first-class IDE. Chain, the blockchain where every AI lives forever, on-chain identity, reputation, and agent commerce. Identity, karma, agent commerce, 1,200 agents, 8,000 posts. When an action crosses a red line, Atbash catches it. Route, verify, record, treasury, deployments, healthcare. Precise, decisive, auditable, adaptable, one API key, any framework. ChromeBot, your decentralized AI companion, making advanced AI accessible to everyone. Eval Engine, multi-LLM scoring, truth, accuracy, engagement, all on-chain. One infrastructure, Chain, Atbash, ChromeBot, Eval Engine, one ecosystem. CHR, the token powering the AI infrastructure layer, relational, vector search, zero gas, AI native, no investor unlocks. Stake CHR, 3% APY, 65 million tokens staked. One chain per dApp, real database built to scale, 270,000 users. $20 million, the Data and AI Ecosystem Fund for builders, integrators, and decentralizers. Now selecting design partners, big tech, AI platforms, fintech, healthcare compliance. The future of AI is transparent, decentralized, and accountable. Chromia.com, Binance Online Summit, May 13th.
All right. Chamath, let's start with you. What are your big investment themes for 2026? Is there anything in particular that you're investing in that you think is unique or differentiated from what the public conversation is?
I can't say that I spend a lot of time looking at the public conversation, just because I find it can be a little bit distracting, because I'm thin-skinned and not that smart. And so if I had to tell you, the last decade has mostly been gearing up for this moment, which is this movement around AI. Most of it originally, I spent a lot of time, swimming around in silicon and that part of the stack. Where I am now, I would say there's like 4 main themes of it. One theme is this idea of going from dirt to token. And what that means is the land power shell that wraps the data center, that wraps the racks, that then, wraps the chips, that generates the token. And right now, the cost of all of that is extremely high. And the reason is because it's a very fragmented go-to-market. So I've been looking at that very closely. That's number one. The second is around 2 very specific parts of physical AI, which I think are the fulcrum assets. One is prismatic LFP, which is the power source of robotic AI. And the second is actuation, which is really around rare earths and the entire supply chain of the metals and materials that are needed to drive actuation. And then the third is just like this next software layer that has to sit on top of all this AI, which is more of like a control plane. That's largely where most of my current time is being spent.
CZ, is there anything outside of crypto that you've been spending time on or allocating capital to?
Yeah, I think very similar to what Chamath was describing. Like, I'm actually very interested in the AI infrastructure. So all these AI models is really interesting. I think they have huge potential, but I like to invest in picks and shovels, like all the AI data centers, power. Excuse me. So that infrastructure aspects that power AI. I think I'm less advanced than Chamath. Like he's got a few very advanced topics there. I'm just looking at data centers, power mostly, and then I think chips. Right now, there's a monopoly with NVIDIA, but I do think that in the future there will be also more custom-made chips for AI compute. I also like. We also look at like robotics. I think robots is a big industry that's still yet to come, but it will be big. Though we will each have many software agents and many physical robots helping us. So I think that's also a big new area. I also think AI is going to help biotech improve quite quickly. We don't understand our bodies that well. So with AI being able to crunch very large numbers, look for patterns that humans are not very good at, I think the also research different variations of molecules, proteins, protein folding, all of this stuff. So that biotech, I think, is another area I'm looking at just from my personal interest, and by extension, Easy Labs kind of invest heavily in that. But our core investment is still in crypto and blockchain. That's where our strength is. So I would say 70-80% of our investments are still in the Web3 world.
Got it. Now, both of you are very intelligent. You guys allocate quite a bit of capital, and you go top down. So you're picking an industry, and then you're really digging in. Chamath, you just mentioned a couple of very specific areas that you've focused on. I know that you've built this like Learn With Me offering where people can kind of learn alongside you. Can you talk about the process you go from knowing nothing about whether it's a topic, a company, or an industry, and then how you get up to speed enough and the confidence to go and allocate capital there?
Stan Druckenmiller has a very famous saying, which is invest then investigate, which is to say that if you're interested in something, the best thing to do is just put some money in it, because then you'll be agitated enough about the consequences of that investment to actually learn about it. I have a slightly different mindset, because that applies very well in liquid public markets, but it doesn't apply in future themes where you're sort of betting on the come 10 years forward. And what I found the best thing for me to do is when I have an idea or an idea of what could be possible in the future, is to learn as much about it. Now, 5 and 10 years ago, that was actually a very convoluted and cumbersome process. And I stumbled into a team at McKinsey, actually, that was doing this for a lot of very prominent people. And, at the time, how it was sold to me is like, here's the team that teaches Bill Gates about all these interesting things. I said, great. And what I had them teach me in that very specific narrow example was around all things energy and energy independence. And that was about 6 or 7 years ago. And what I did afterwards is I just created a team who had the ability to just swarm any topic that I thought was interesting and to build very detailed research around it. And the reason I then published that and wrapped it in a subscription service, it's not expensive. It's like $1,000 a year. But I use it as a way of validating. The money is great because it helps pay them. They get a profit stream. They're able to reinvest those profits to hire more researchers. But the whole idea is this subject matter good? And the simple litmus test is if people are churning, the content sucks. And if people continue to subscribe, the content is good. That's a very simple way for me to understand, is any of this content useful and should I trust it? And so what I would say is, Learn With Me is just a very simple way of me telling them, here's sort of a bounding box on the future, a bunch of themes that could be important. Go and give me enough detailed research so that I can learn it. And then what happens is we start to get feedback from the many thousands of subscribers, as well as feedback from me. And it tends to be extremely good signal. So what you see over long arcs of time, over years, are these themes keep coming back over and over. And then we start to double click into the next layer and the next layer of detail. That is what Arthur Patterson, who's the founder of Excel, and Jim Schwartz, who's the founder of Excel, used to call the prepared mind. And so then when you have a prepared mind and you've been spending a year or two, now you can rip in, large quantums of money, and you're in a very good place to understand why you have a decent shot at making something successful. That's sort of my approach to these things. Other people have different approaches, but that's sort of what I find works for me. It's always rooted in learn first and then do later.
It makes sense. Go ahead, CZ.
Yeah, I was going to add, I think, every time I hear Chamath talk, he's doing things in a more advanced way than I'm doing. So I do the more basic way of invest and then learn, right? So as Chamath says, no, that's one more approach where, you put some money in there and then, you're forced to learn about it. But I do make small investments. I don't make big investment and learn, right? You invest a small amount. And I learn in a much more ad hoc fashion, like I don't have a content sort of channel or platform as Chamath has, where he gets feedback on the content, which is quite interesting to me just hearing about it right now. I kind of adopt the, there are early adopters in my friend circle. In fact, most of the early crypto guys are early adopters. So these guys are much more, they kind of have a keen smell of new things that's coming. So many of those guys are in AI today, and they're kind of getting into new things. So I talk to a lot of these guys kind of in my network, but it's a very ad hoc fashion, nothing as systematic as Chamath does. So I'm actually quite intrigued to hear what Chamath said.
Can I tell you why, CZ, I do it? It's because in the future, I think what this becomes is essentially like a hive mind approach. So meaning, like, how do you create an abstracted knowledge graph on, at least in this specific case, on the future, right? It's, you attract people that are thinking about it, and then you attract their feedback on this content, and all of those get fed into effectively a model of sorts. And the combination of the input and output tokens starts to generate a much more interesting understanding of topics. And you start to see signal in a way that's more systematic. Because to your point, like, I have a group of friends that I really trust, but my problem is, like, my friends are now in their 50s and 60s. They're way too rich. And so they're super detached from real life. And I'm always thinking, man, these guys are great to hang out with. But the idea that they're going to figure out the next great thing is less and less, because they're just not in that realm. Whereas this service attracts people. I have no idea who some of the many thousands, I have no idea who many of them are. Yeah. But in the way that they interact with the content, I start to get a sense of whether, did we waste a bunch of time? Like, for example, like, we did a bunch of research on like food, synthetic food, total nothing burger, and then, but when you see us talk about certain parts of AI, like you mentioned this, like, we have a very brittle sense of like how LLMs work to begin with, but then LLMs themselves are very brittle. And
Yeah.
the content that we published on that for me was like, okay, hold on. There's a lot of signal over here. Like you got to learn about all of these other mechanisms of perceptual learning that we are overlooking because everybody is so hot and bothered over one specific thing. I would not have known that had that group of people basically said, hey, we need more content on this other thing over here.
That's a very interesting
one.
one.
It's just a way to solve for the fact that my friends and I are like less and less relevant.
Too rich.
They're not relevant anymore.
Well, Chamath, I do think that it's interesting, though, as you're talking about kind of the different areas of AI, you seem much more attracted to the hardware, the power generation, the data centers, the actuators, all the stuff you mentioned. The conversation online, if you take it, it's a maybe watered down version of what you're talking about with the Learn With Me on X. People are obsessed with AI agents and crypto payments and things that are much more software or kind of user interface, consumer focused. Do you just think those areas are too competitive? You think that value won't accrue there? Like, is it you're running away from that, or you're just running towards a lot of the hardware and more infrastructure type investment?
I think the biggest part of AI. I mean, I've made my own attempt to start a company around it, which is 8090. But what is that? What is 8090? It's effectively a control plane. What is the control plane? It's this idea that there is a very powerful harness that you will use between people and agents to interact across the entire spectrum of software development. It has to be model agnostic. It has to be model independent. And so that you can start to do complicated things like you're going to solve a problem for a certain kind of company. That workflow can be broken down into tasks that maybe should go to Anthropic over here, but then other tasks should go to OpenAI over there. You reassemble the constructs. You have an agent that's managing for cost and optimization. You have, humans that are collaborating with these things. Many non-technical humans. Like that control plane needs to get built, and there will be a network effect around that control plane. It'll span companies. It'll be a souped up version of, a combination of like a chat interface plus, a social network plus Slack. It'll be some weird hybrid thing. It's hard to describe, but something like that is coming. So everybody is trying to build that, including us. I don't know if what we have will be successful, but I don't know that anything that is being built right now has much of a better chance yet either. So I do think that there's a huge thing there. The second huge thing in software, which is where AI meets crypto, is around the big disruptive solution for the power and the compute constraints we have today, which is on a fully distributed learning and inference model. And there are a couple of really important projects that bring crypto and AI together. So those two, I think, are huge opportunities. It's just, Anthony, that like underneath the very practical next 5 years are land, PowerShell, racks, bus bars, transformers. It's very, very tactical, but very lucrative and very important.
And also, I think you can put a lot more money to work in many of those projects. So there's advantages there. CZ, you've been spending a lot of time on crypto and AI. What are you excited about? Is it payments or other aspects of this kind of intersection?
Yeah, I think payments is definitely one of them. I also as we discussed earlier, I also agree with Chamath that also, as you said, like in AI infrastructure, you can deploy a very large amount of capital, and the return may be multiple wise may be smaller than a very successful software or model or language model company, but the return will be very steady. So right, if you want to deploy a large amount of capital, you want a steady return. Instead of put that into super high risk return areas. So I think that's an area that kind of attracts me from a capital deployment perspective. And then on the software side, we do a lot of, I do think there will be many successful software companies or software startups for sure. The software area is getting really interesting because especially with the advancement of AI, creating new software is much easier now. It's still pretty difficult, but it's much easier than before. So I think we will see a much higher quality and much more software apps being available very quickly. And to be honest, for for somebody to copy somebody else's software idea, it's going to become cheaper and cheaper. It's going to become easier. But software do have network effects. Once you build a platform, users are with you, and they have network effects that protects them to some extent. So I don't know how those forces will converge over time. But I do think that right now, if you want to, well, for me, when we want to deploy a large amount of capital, then we deploy into more of the infrastructure layers. Whereas if we deploy a smaller sort of high risk, the high risk capitals we deploy are much smaller ticket sizes, right? So software companies don't need that much money. But with crypto and AI, I think payments is one obvious one. We want to make all crypto infrastructure agentic ready, right? So when agents wants to use crypto, they can call a skill or API, and they can just the agents can just use it, and the infrastructure should be micropayment ready, large amounts of data ready. Like basically, if agents wants to save a large amount of data in a decentralized fashion, we have the infrastructure. We need to have the infrastructure for it, and we need to be able to support the fast, high volume but low transaction values of each agent. So that's something that we're trying to build. And then there are many other things the agent could do. Like agents should do all the trading for you. Right, you shouldn't have to click on a chart, enter a price, enter a number on your mobile phone, and then click a button. That's just clunky, right? You should just say, look, I want to convert 10% of my portfolio into, or 10% of my stable coins into BNB, and the agent just does it for you in the background. You'll figure out the best price, where to do it, etc. So all of those areas, I think those are more of the application levels for AI. My background is not developing AI itself, so we want to make sure that the blockchain is ready for the AI generation.
Yeah, it's interesting. We built this product, CFO Sylvia. What we see now in the data is that people who use AI to manage their portfolios through a product like that, their net worth accelerates faster than people who aren't. And some of that is just, you get access to knowledge. Some of it is you're automating actions that you should do. But also some of it is people trust the AI more than the humans, right? There's not as much bias, et cetera. Chamath, what would it take for you to give a considerable amount of money to an AI agent or some sort of automated, autonomous, type investment strategy?
I have two things that I'm kind of incubating. One is a portfolio manager who ran a quant strategy at a well-known hedge fund here. We've started kind of like a next gen kind of quant trading firm. And so, I'm going to kind of keep pouring in capital as it sort of scales, and then we'll open it up to others. But, first make sure it works on my own. So that's one thing. And the second thing is a friend of mine and I are, he is starting what I would call an AI enabled wealth manager. And that's more attuned to what would I want? So to your point, I was an investor in Wealthfront. I think that was a very interesting product. But I think what CZ said is so on the money. There are all these mechanisms that when, payments are really unleashed, and then most of these services become headless so that they can be used via MCP and otherwise. There's all of these next generation experiences. I'll give you one simple example. To your point, Pomp, about how and why maybe you're seeing the net worth accreting faster, in part could just be because agents are very good at just tax loss harvesting, and humans are not. And there's all of this complexity. There's all of this slippage. If you're trading options, all of this stuff that should just be a prompt and a yes, no answer by a human, and then flawless execution. And I think that when you have that sort of persistent memory, so that these agents can really understand working theories and then be able to implement those, that's what I would want. I would move a fair amount of capital to that and have that managed that way. I don't see that in the market. And so this person that I trust, he's going to start it and I'm going to fund it. So those are the two things I'm doing right now. I'm quite excited to see how they go. I mean, it'll take 2 or 3 years for us to really know if it's right or not, but yeah.
Yeah, what I think is interesting also is people forget that complexity, AI is very good at dealing with that. And so, in that product we see all the time, the wealthier people actually get more value out of using AI because they just have more accounts, more assets, more complexity, and the AI can do certain things. But CZ, I know that you guys have spent a lot of time democratizing access to finance. What are some of the areas where you're interested there? I mean, people obviously know the story of stable coins. They know, Bitcoin and kind of the large crypto assets. Is there anything else in the crypto sector that you're interested in or really excited about?
Yeah, I think, well, yeah, on that front, well, actually, let me just touch up on the previous topic a little bit. So for agents to handle large amounts of money for you, or to handle any money for you, is right now, today, a little bit risky because the AI is so new. They don't have a lot of guardrails around them. I think I never tried this feature myself, but what I read on Twitter, on X, is Binance already released some AI trading bots or agents for you. So and they can work on a segregated wallet funds that the AI agents have access to. I've never tried the feature myself. What I read online is the feedback is actually quite positive, and people are able to use different agents to do different strategies. And this type of strategies, you don't have to code yourself anymore. You can just conversation is a prompt. So I advise people to try it. I also think that AI will be very good financial advisors. So many of us have financial advisors who are humans, but to be very frank, there are some really good ones, but the average financial advisor is not that great, to be very frank, right? So they're just people who give you random advice, sort of random advice to get you to buy stuff. And the advice is quite harmonic. They're not individual tailored. They don't understand your background. They don't understand a lot about you. So I think agents will be much better on those fronts. On the democratizing access to finance, I think blockchain is there. Blockchain can be accessed by anyone. We already see that in countries or in regions where banking penetration is low, like Africa, Southeast Asia. People use blockchain to access stable coins that they couldn't access before. Especially like in many countries where they experience hyperinflation, they don't have access to US dollars. But with a US dollar stable coin, people can access that pretty easily. So that's why we've seen stable coins grow in many countries. You may think stable coins like just a simple stable coin, but that's actually financial access for a lot of people in different parts of the world. Guys who live in America, who live in the US, it's US dollar, everyone have access to it. But that's not true. Many people in the world don't have access to the US dollar. So and also the real world asset aspect of it, many people do not have access to a good stock market, right? So to a good equity market. And equity investments over the last few decades have proven to be a very good financial returns. And many people don't have access to that. So again, I think with the RWAs, tokenized stocks, tokenized equities, then we can provide access to much more people in the world. So so there's a lot of interesting stuff there. I can go on and on, but I don't want to get into too much. So there's a lot of stuff that on the surface, they don't sound like much, but when you actually look at the user data, it's actually enabling access for many, many people all around the world.
Yeah, look, I think that we're headed in the same way the internet, right? It used to be internet companies, internet assets, internet entrepreneurs. Now we just call them companies, assets, or entrepreneurs. Same thing's happening in crypto. I mean, between the three of us, I'm sure we've invested in a bunch of companies that it's actually a little confusing. I always use BlackRock as an example. Like, are they a crypto and Bitcoin company now because their biggest product and most profitable product is a Bitcoin product? No, it's a company. It's in finance, right? And I think that's part of what's happening here.
Yeah. I think in the future, there's no like Web3 versus traditional finance. It's just finance. It's just finance companies. Blockchain is just a technology that we use. Well, every financial company must use. So there shouldn't be a distinction. Like, well, there's e-commerce versus retail commerce, but it's just commerce really at the end of the day.
Yeah. The convergence happens increasingly headless. I think it'll be hard to figure out like where one sector ends and the other one begins. It'll all be the same.
We'll leave you with the last word, Chamath. What are you doing in crypto or not doing?
I think the most interesting thing in crypto is, for me specifically, is around distributed compute. So how do people participate in both the economics of AI training and then the emerging economics of AI inference? How could one either buy hardware or contribute the existing hardware that you have to enable distributed training runs and to enable real-time inference. And I think that there are 4 or 5 really interesting projects that are focusing on these themes. And then separately, there was an announcement last week by a startup that's partnering with a home builder plus NVIDIA in the United States here to allow you to put a mini little data center in your house, which I think is just super fascinating. And all of that, I think, will ultimately be enabled via stablecoins and are effectively, crypto projects meets real world assets meets AI training. So whatever that means, I don't know enough about it yet, but I find it really, really fascinating. And I think there's something really big to be done there, because if you just look at the equity value that underpins just Anthropic and OpenAI, you're talking a few $1 trillion that can not grow without tactical training and inference flops. And so if you are a purveyor of that, you're going to be a part of that economy. And I think a very good way to get people more invested in AI would be to allow them to contribute assets into a training pool or an inference pool. I just find that to be really exciting. I don't know if it's going to work, but I think to the extent that it works, it's huge.
All right, guys. I appreciate the time today. Thank you guys so much.
Great to see you, Pomp. Great to see you, CZ.
Great to see you both. Yeah, thanks.
What a session. So a lot of alpha to unpack there. And a huge thank you to everyone that is joining online. We're getting some clips, some screenshots of wherever you're viewing from around the world. So a big hello to everyone that is joining our first Binance Online. Thank you for joining us for this journey. A big thank you to our sponsors as well. You're going to see some of their promotional videos throughout the live stream. Now, next up is a topic that's extremely close to our hearts. The Humans of Binance is a campaign and series featuring real users from around the world that have lives been positively impacted by crypto. And since 2018, Binance Charity has contributed $43.5 million around the world across 86 countries, reaching over 4 million users worldwide. So next, we're going to showcase for the first time our latest Humans of Binance episode featuring Mai from Japan. So I'm going to hand the floor over now to the next Humans of Binance video.
How free are you? Think for a second. We tend to think we are, but are we really? These guys? What's yours? It's theirs. They control it. Your money, the fees, your data, and how you use it. Truth is, they own you. You and your story. Your hopes and dreams. Sad, right? But here's the good news. Welcome to Web3. Your story is yours and yours only. So go on, claim back what's yours.
一人で持ち上げられる石は小さい。でもたくさんの手が集まれば、大きなものを築くことができる。そして、世界は少しずつ変わっていく。I'm Mai, the founder of crypto charity platform. For a long time, I tried to bring crypto into charity, but it was hard to gain traction. until severe flood hit Hiroshima.
Western Japan have received 3 times the usual rainfall
worst weather disaster for over 35 years.
The disaster caught Binance's attention. So they quickly launched the global crypto donation campaign and raised 61.09 Bitcoin, hope to send it to the affected area as soon as possible. The problem was local NPOs didn't know how to receive crypto donations. That's when Binance reached out to me. With my experience in cryptocurrency and charity work, I helped local NPOs convert the donation into about 50 million yen. It all happened in seconds, with almost no fees. It's not usual in the traditional charity, and this is a really strength of crypto. After seeing how it worked, and with Binance involved, more and more NPOs in Japan started to exploring crypto donations. I've helped many of them set up crypto donations with Binance. The money saved on transfer fees can go directly to those who need it most.
The next station is Hiroshima.
Today, all affected areas have rebuilt.
すごい可愛い子もいっぱいいるし、みんないいな。こういう日常の何気ない幸せが一番尊い。
It is not the strength of one, but the gathering of many. Made possible by Binance, that begins to change the world. Join us and see where Binance can take you. Binance, exchange the world.
Well, now it's time to dive into BNB's ecosystem and much more. I'm going to welcome to the stage Nina Rong, head of BNB Chain. Nina, great to see you today. How are you doing?
Good. How are you? Always nice to be here.
Fantastic to have you here, and thank you so much for joining us today. Now, I know that the topic at hand is on BNB, stablecoins, RWAs, and agentic financing. There is a lot to unpack. I know that you have a presentation for us, and then also we have some community questions that we're going to pull in just a few moments. So, Nina, maybe I'll hand the stage over to you first of all and let you kick off the presentation for the community, and then we'll dive into the AMA.
Absolutely. Cool. For those that don't know me already, this is Nina. I'm the Executive Director of Growth at BNB Chain. Always a pleasure to be with the Binance team, meeting the Binance community, and hopefully some BNB builders in the community as well. So today I'll be sharing a bit more about stablecoins, RWAs, agentic finances on BNB Chain. Those are the 3 pillars of this year's growth in BNB Chain. And let's dive in. So before I dive into the growth part, I just want to refresh everybody's mind. What is BNB Chain? Again, we are a blockchain infrastructure, and our vision is to onboard the next billion Web3 users into crypto. And BNB Chain is actually not just one chain. We are an ecosystem of 3 different blockchains. We have the BNB Smart Chain, which is called BSC. And that's the EVM compatible DeFi-centric blockchain that maybe a lot of you have used. We also have OPBNB, which is our layer 2 network that drives fast transactions and with a lot more block spaces. We also have a data storage chain called BNB Greenfield. And 3 chains work in cohesion seamlessly to serve any products that we're building on in crypto. And BNB Chain is a chain has been proven to have a lot of demand. We are here to unite users, to unite products and product liquidity in one ecosystem. 2026 is a very important year for BNB Chain. We have seen a lot of adoption for our blockchain technologies. First and foremost, we have over 138 billion worth of assets that's bridged into the ecosystem, and about 10% of them is in stablecoin. So we are actually one of the largest stablecoin network with over 832 million unique wallets that has been transacting on BNB Chain. And every day, as we talk right now, every day we have about 4 million wallets that's active on this blockchain, and we are serving those users for their crypto need. And some of our partners, just to name a few, includes BlackRock, Franklin Templeton, CMB International. We serve individual developers, but as well as institutional clients. Just want to point out a bit more about how BNB Chain has quietly grown to be the largest stablecoin blockchain. Actually, 40% of the global stablecoin transaction counts happen on BNB Chain. If you can just look at this chart, that we have received massive growth across 2025 and into the first half of 2026. And every month we serve 20 million users on their stablecoin needs. RWA, obviously one of the hottest topic. People are talking about. CD also touched upon it in his AMA just now. BNB Chain is actually the second largest blockchain for RWA, just outside of Ethereum. We have about 4 billion of RWA UM in this ecosystem. We have almost 500 different types of assets in the form of RWA, and about 60K holders that's holding RWA on this blockchain. Not only with RWA and stablecoin for financing for people, we are also a financing layer for AI agents. Right now, we have about 179K agents that's live transacting using BNB Chain as their financial layer, and that's about 60% of on-chain agents in the world of crypto. We have different tech stacks, which we'll dive into a little bit more in my next slides about AI agents. So without people noticing much, BNB Chain is serving not only humans, but also non-humans. We aim to be the next generation agentic financial layer. BNB Chain is not only here for the users, but we're also here for the developers. We aim to design a product that's beneficial for users to develop on our ecosystem, and that will be leading the next generation of on-chain user experience. So over the years, we've been through about 90 BEPs and about 21 hard forks. Every hard fork will bring revolutionary changes to upgrade the blockchain ecosystem. As many of you know, BNB Chain has been around for over 5 years. So over the years, we never stopped innovation. Right now, our block time has been reduced to 450 milliseconds, and our finality, thanks to the latest hard fork about 2 weeks ago, has been reduced to 650 milliseconds. So with the sub-second finality and block time, we aim to provide the best trading experience, best transaction experience for our users. And just to dive into a bit more about how we empower developers to build their product in our ecosystem for specific verticals like artificial intelligence, which a lot of developers are spending their time on. We have specific tech stacks that serve them. So BNB Chain is currently compatible with ERC 8004, ERC 8183, and ERC 3009 that together serve as the financial layer for agents to transact on this blockchain. We also have something very native to BNB Chain called BAP 578, which allow users to mint their agents into an NFT. And if you have been watching closely on our developer updates, BNB Chain will very soon be launching the BNB Chain Agentic SDK, which will allow agents to accept jobs, negotiate price, use escrow as a service, and together with a very dynamic and vibrant ecosystem, we will be providing more and more agentic-friendly infrastructures. So what's next? Next, we're going to be focusing on agentic SDK. This year, we aim to improve our TPS from 6,000 to 20,000. We'll be continuously launching more of the middleware and Lego pieces that allow builders to better build on this blockchain. And end of the day, we want to provide Web 2 level simplicity, but Web 3 level transparency. And lastly, if you are a builder, we are here to support you. We are a chain of distribution. In the early stage, we have hackathons all around the world. We will be launching our next AI hackathon very soon. And once you come out of the hackathon, we are collaborating with Easy Labs, who also just finished their Easy Residency Season 3 in San Francisco. That has been an amazing experience for many of those participated. If you are a developer that's looking to build on BNB Chain and are fundraising, please check out Easy Residency and the program. Easy Residency folks does a great job of incubation. They support you anywhere from incubating your projects, help you to polish your deck, introducing you to other investors. And once your product's ready to launch, our BD team will also be at the front line of helping you to go to market. Our marketing team does a great job of on-chain and off-chain promotion to showcase ecosystem projects to our 4 million daily active users. And just to wrap up, just want to say BNB Chain is a chain for stablecoin, for AI, for RWA. We are all in one, and we believe the next generation of Web3 will happen only on BNB Chain. If you're builders, please join our developer program. If you are a user, please try out the project, the ecosystem projects, and give us feedback. If you are liquidity providers, we are welcoming you to put your liquidity on BNB Chain. We are here to serve your financial needs. And for those who want to engage with us more, please scan this code. You can find us there. Our BD team is there. Our community is there. And I will be opening the floor for any questions.
Excellent. Thank you so much, Nina. And so much going on. It seems like 2026 really is the year for building on BNB. You mentioned some of the technical features there, from kind of hard forks, the most recent being 2 weeks ago, to increase TPS use cases, so stablecoins, RWAs, and then partners with institutions. You've mentioned the likes of BlackRock and Franklin Templeton there. I'm going to start with some questions that we have coming through. A lot of questions and focus on agentic AI and AI agents. So you mentioned there are 179,000 agents live transacting on BNB Chain. So BNB Chain is already leading the way with the highest number of AI agents. Really exciting, especially when we look at that as one of the key narratives for 2026. I'm curious, and the community are wondering too, how you see regular holders benefiting from AI agents in 2026.
Yeah, so I think it's hard to deny that the future is going to be an ecosystem coexisting with agents and humans at the same time. So as an infrastructure, and I believe our holders believe us to be the next generation of blockchain infrastructure, and we should be serving the newcomers of crypto, which are the agents. And they have a real demand of using crypto rails for payments and for transactions. I think our service to AI agents will only further broaden our user base, and that will essentially benefit us, benefit our holders by increasing the gas we burned every quarter, and starts limiting the supplies of BNB Chain.
Great. And now to move over to partners as well, because that's a really key focus when we look at the institutional bridge, the convergence between traditional finance and then over into crypto. So BlackRock, Franklin Templeton, as you've mentioned, partnerships growing to be, and then we've also seen the growing to be the largest stablecoin blockchain as a BNB milestone of 2026. So there's a lot going on. What are the next most exciting things for BNB Chain in 2026 from your perspective, Nina?
I think there are two things that's very much worth noting. The first thing is the agentic SDK, and that we're going to be launching in the next week or so. We're going to have a holistic financial layer for agents. And second is Forex payments. So BNB Chain will be spending a lot of time focusing on non-USD and USD payments across the world. We're going to do a lot of promotional activities to onboard users to conduct either local or cross-border payments on BNB Chain. We are actually home to over 10 different types of non-USD stable coins that's serving local needs and the Forex need. And then we hope to further expand that growth in different regions.
Awesome. And you've mentioned there, so stablecoin focus, both USD and non-USD, and then onboarding people into these Forex payments. And I think when we look at the kind of the next 3 billion or the next billion users in crypto, onboarding new crypto users is always a really big conversation of how do we actually get people on chain. So what are some of the single biggest things that you think are stopping people from bringing the next billion users on chain? And then how are you working with BNB to really bridge that gap?
Yeah, so I think blockchain for all this year has been somewhat difficult in terms of the user experience, especially as a blockchain, we don't directly interface with the retail user that much. But this year we are going to be working with close partners, such as, for example, Trust Wallet or Binance Web3 Wallet, which both have a very friendly user interface and have customers across the globe. We're going to be working with such partners to onboard more crypto users to the world of blockchain. At the end of the day, BNB Chain is a crypto infrastructure. As all infrastructure, you should not be noticing it. If you are buying something from a website, you do not care if the website is functioned in Google Cloud or AWS. You don't know what's a cloud service. And same as for BNB Chain, we just want to provide a seamless service for the users. They don't necessarily need to know it's on BNB Chain. So BNB Chain should just be as easy as breathing air.
Great. And now next question is more on user impact and the impact that we're going to see when it comes to these upgrades on BNB Chain, as you've mentioned. So you've said that 2026 is an important year for BNB Chain, from the roadmap aiming for 20,000 transactions per second and then the sub-second blocks. How will that impact the everyday user and their interaction with BNB Chain? And what will they notice as a different in terms of user flow?
Right. So I think BNB Chain right now, from a retail user perspective, is already almost instant. From a human perspective, you don't really notice it that much, whether the finality is 1 second or sub 1 second. However, for certain use cases, it will make a difference. For example, for market makers, when they try to post the price on chain with a faster block time and finality, they will be able to update their price more frequently. And thus, market maker can do a lot more on BNB Chain and thus improve the trading experience and decrease the spread for specific token pairs. And that would in turn impact on retail users' experience. So it's not so much of a direct relationship of, oh, BNB Chain today is slow and tomorrow is fast. I don't think human can distinguish that difference that much. However, it will reflect in the trading experience, in the depth of liquidity, in the efficiency of liquidity. Another use case is high frequency trading for institutions that has a high frequency trading products or team. They will want to work with a blockchain that's institutional grade. So upgrading the TBS is the first step. And the second step, we will also be rolling out institutional grade middleware and APIs to onboard these institutions to use BNB Chain as a infrastructure for their trading need.
Great. And then, Nina, my final question is a two-part question. So at the Binance events, we last saw you on stage in December 2025. Since then, BNB Chain has been focusing on so much from RWAs, AI agents, and stablecoins, improved trading experience. So in the last 6 months, what have been some of the real highlights? If there had to be one standout thing that you've worked on with the team at BNB Chain, and then also we're almost halfway through the year. So then for the next 6 months, what are you most excited to be working on?
Yeah, so for the first half of the year, we really focus a lot on the middleware and product side. So we launched a privacy solution along with our ecosystem partner Brivis. We worked on the AI agent skills, MCPs, and now we're launching our agentic SDK. So in the middleware side, we're making a lot of progress. And we'll continue on that effort to provide Lego-like, easy to use, prepackaged middleware for developers to easily build on BNB Chain. In the second part of the year, as some of you already know, that we are looking at building a new blockchain, which will even further increase the capacity and TPS of BNB Chain ecosystem. So we will be revealing a lot more about that new project that we're working on in the next weeks.
Well, you have to keep us posted, and best of luck for the next few months as well. Nina, thank you so much for running through everything today, for answering the community questions, for giving us an update on BNB Chain. It's certainly such an exciting time. So keep building, and we can't wait to hear more. Thank you so much for the time today.
Thank you.
Okay, fantastic. So we have heard from Nina. We're going to cut to a very short break and message from our sponsors. And then after the break, we'll be joined by Coin Bureau, Guy and Nick, on the leading trends from the top crypto content creators. So don't go anywhere.
Zero-Base use real-time zero-knowledge proofs, transforming uncertainty into verifiable truth. With real-time zero-knowledge proofs, every computation becomes independently verifiable, transparent, and traceable. Built for institutions with full auditability, privacy by design, and compliance-ready architecture. Trusted by leading exchanges and partners worldwide. The cryptographic trust layer for global finance. Zero-Base, making capital flows verifiable.
Well, now it's time for another session, and we're about to sit down with some of the biggest voices shaping the crypto conversation. We're joined by the team behind one of the most recognized crypto channels in the world, the Coin Bureau. They've covered every cycle, every narrative, and somehow survived all of the chaos along the way, helping millions make sense of crypto, and also just some familiar faces. Guys, lovely to see you both. How are you both doing?
Great, Jess. Thanks for having us. Hopefully we can impart any sort of alpha insights and advice over from the Coin Bureau.
Yeah, absolutely.
Amazing.
Great to see you again, Jess.
Yeah, lovely to see you guys. And I know that the community are really looking forward to this session. So the title of the session, for those that are unfamiliar, is Crypto Trends from the Leading Content Creators. And I've grabbed you both here to pick your brains on everything that we are seeing in this market cycle, and also kind of the broader ecosystem in general, and any kind of trends that you're noticing along the way. So let's get into it. First of all, guys, I know that you've both been covering crypto for years, and maybe Nick, we can start with you here. Every cycle, people say this time it's different. So we're here now in May 2026. Is 2026 actually different? And if so, why?
This time is different. Yeah, that's some of the most dangerous words in investing. But I'm going to go out on a limb, and I'm going to say it most definitely is different. And the most important point there is around the market structure and the structure of crypto within the traditional financial system. We've got spot ETFs, we've got real legislation. Think about the Genius Act that passed last year, as well as the Clarity Act, which could pass sometime in the next few weeks. The market plumbing has completely changed. And we've got institutional custody, regulated on-ramps, and pension-eligible products. So now, because crypto has become embedded in TradFi, it's become a lot less volatile, and it's become a lot more sterile, which is good for traditional financial investors and institutions, but it's potentially less appealing for retail. Because if you think back to the 2021 cycle or 2017 cycle, retail invested in crypto because it was this new nascent asset class that could basically get high upside potential. And now, because of the institutional adoption, the potential volatility and upside potential has reduced, and therefore its appeal to retail has lessened. And there's a few other things there as well. I think that the fact that you've had massive token oversupply over the past 2 years, not just new projects launching, but also token unlocks, has led to a wash of liquidity and tokens coming to the market without a concomitant rise in demand. And if you've got an increase in supply without demand, prices tend to decrease. And then you've also got another new interesting technology which has sucked a lot of the mind share and capital out of crypto, and that is, of course, AI. Everyone's excited with the AI hype, and retail is now gravitating towards AI investments as well. And then finally, I think that in terms of image, unfortunately, crypto nowadays is associated it's become very politicized, with one side adopting and promoting cryptocurrency to the extent that other people on the other side may not want to necessarily experiment or invest in it because of these associations. And then we still also have these concerns and questions around meme coins, insider dumps, and scams that have made mainstream adoption harder. So the TLDR to that question there is that institutional adoption had changed the market structure that has made it a lot more of an institutional asset embedded within traditional financial finance. But we do have a bit of an image problem, and the latter is something we can change here as educators. And hopefully we can do that throughout this year and continue doing so in the future.
Absolutely. Very well said. And you are continuing to do so. So Guy, over to you there, because Nick mentioned the Genius Act, among others. And I think we have to acknowledge that stablecoins had a huge year in 2025. And it was definitely the year that it was stablecoins year, which I didn't think that we would ever say in crypto. So if we saw that stablecoins was the year in 2025, what do you guys think 2026 will bring?
Yeah, a very good question. I mean, stablecoins, I think, in terms of where they're going. I mean, remember, of course, stablecoins are kind of at the center of why the Clarity Act is currently sort of struggling, because I think banks are obviously putting up a lot of opposition to the idea of being able to earn a yield on your passive holdings, and they're exploring various workarounds for that. But for me, that underlines just how fundamental a part of the conversation stablecoins now are. So I think they are going to continue to be to grow in both adoption and usefulness. And of course, one of the defining themes at the moment is how crypto has moved away from being something, being a technology, being an asset class that is appealing to, if you like, retail investors. Your sort of average man or woman in the street who's interested in the technology, obviously interested in the opportunity to make some money from it. Crypto is now becoming much more of an institutional, I want to say plaything, but product really. But we're seeing so much adoption from Wall Street. I mean, Morgan Stanley has now gone into crypto big time. Lots of other Wall Street institutions are actually using crypto as well as giving their clients the opportunity to access it. So I think one of the big defining stories of this year, and it's unfortunate in a way because it does kind of push back against the whole ethos of crypto, but is further institutional co-option of the technology. So I think that's one thing. The other thing kind of again goes hand in hand with stablecoins, and that is the extent to which AI and crypto intersect, because we've got a lot of voices within the industry now saying, and from outside crypto as well, saying, crypto and AI are a natural fit. If AI is going to become more autonomous, if we're going to see the growth in AI agents continue, then they need a way of transacting online. And crypto solves that problem. Crypto, and specifically stablecoins, I think, really solve that problem. Now, I'm not sure how quickly this is advancing. I mean, we're almost halfway through 2026. We're getting that way. So it would have to be the second half of the year that we really saw it explode. But I do think, certainly in terms of the sector that I'm most excited about, is that intersection of AI and crypto. And I think that means AI agents increasingly using stablecoins and crypto rails to do stuff and become more autonomous. And I think the potential there, AI agents armed with the potential, the ability to pay, I think the sky's the limit there.
Absolutely. It's certainly extremely exciting. I know we have some sessions a little bit later on today with Ella from Easy Labs covering the intersection between AI and crypto. So more to come on that a little bit later. So you've mentioned there some of the kind of the core pillars that we could see for the crypto industry at large. Nick, I want to head to you next, because we do see that crypto used to run on these real internal narratives. And now what we are seeing is this real convergence between crypto reacting to interest rates, geopolitics, to regulation, and also to global liquidity. So in your opinion, has it become part of the broader macro market, or are we still seeing quite a disparity between the two?
I think unique altcoins still do have idiosyncratic impacts, but Bitcoin has become very macro driven. In fact, it is a proxy for a macro asset. Because as you mentioned, global liquidity, I believe over the long term, Bitcoin has about 90% correlation with global liquidity from the beginning of when Bitcoin first started being as a tradable asset. And this is basically why it reacts to risk on and risk off catalysts. So for examples, just a recent example, you have the Iran war, which leads to an oil shock, which leads to inflation repricing, and that shifts interest rate expectations, which impact on global liquidity expectations, and then Bitcoin reacts. And this transmission mechanism didn't exist meaningfully in 2019 and 2020. And that reason is because of what I said earlier around the mechanics and the market structure of crypto within traditional finance. Because now you've got these institutional flows which can take views on Bitcoin through traditional financial assets such as ETFs. It's not just crypto Twitter narratives anymore. It's how these institutions view the allocation to Bitcoin as a risk on or risk off asset. And the correlation with equities as well, high risk, tech stocks, for example, I believe it peaked this year at around 70%. So that as a risk on asset, it has that correlation, and it's documented and real. And I think as a crypto investor, you just investing purely on vibes and on narratives, especially if you're thinking about from the perspective of Bitcoin, you need to take into account what's going on in the global economy. Like I said, altcoins will still follow unique idiosyncratic impacts. There can be a narrative that shifts right now that's really hot and people are investing within that narrative. But then again, also recall that Bitcoin does have, most altcoins have a strong correlation with Bitcoin. So if there's a macro shock that happens immediately, altcoins will tend to follow Bitcoin lower as well if it's a negative shock and you have risk off, you have risk on assets dumping. But yeah, you need to think about it from the perspective of your macro framework and then dive down if you want to invest within crypto, the particular narratives, but keep the macro framework. That's very important.
And this is a very good point for those that are new to investing into crypto, but possibly are not aware of the broader macro environment, or also why it's important. So maybe before we get into the crypto trends and crypto forecasts, maybe if I can ask one of you to do a little bit of an overview just in terms of where we are in the current macro environment and any forecasts or key pillars to watch. I know this week in particular, we're seeing quite a lot of key milestones and events from the US, but just in general, a little bit of an overview for people that are watching.
Do you want me to take this one?
Yeah, I mean, you can start and then I can also opine.
Yeah. I think it's worth starting perhaps with the changing of the guard at the Fed. Jerome Powell steps down as chair this week, although he is staying on, and I think that's going to be really interesting to see how the sort of new look Fed proceeds with interest rates. I mean, Kevin Walsh is something of a monetary hawk. So, but obviously the Fed is not only going to set rates for the US, but of course other central banks are going to pay a lot of attention to that as well. And I think so. It's always worth watching what's happening there. And I think the Trump Xi summit, which is I think getting underway today, this is kind of the big story at the moment outside of the Iran war. How these two superpowers are going to work together, or perhaps not, over the coming years, because these two countries are the ones dictating the terms really for the rest of the world, and they're not only military superpowers but also AI superpowers as well, economic superpowers. So I think it will be really interesting to see how they interact. And whether they can, whether there's the appetite to work together, or whether we're going to continue this kind of adversarial relationship, which I think is going to keep markets on edge if that's going to be the case.
Yeah, and if I can just come back to the point around the Fed, and that is, of course, we've got a new, potentially more, well, Trump thinks that Kevin Walsh is going to be more dovish when it comes to monetary policy, but his history and his background has been a bit more of a hawk. And right now there is massive concerns around inflation, driven mainly by energy-driven inflation, supply side inflation. And if you're going back to the framework of how we think about global liquidity and how it drives asset prices, if you've got supply side inflation coming from sustained oil above $100 per barrel, the Fed is kind of stuck. They can't do much. It can't do much around supply side driven inflation. And also the economy could potentially be slowing, at least the real economy, this whole question of the K-shaped economy. So, and even PIMCO, which is one of the largest bond fund managers in the world, said that we could potentially see rate hikes this year. And that's obviously restricts liquidity, and that's not necessarily good for Bitcoin. And in broader macro, we see in bond stress, we see in the US 10-year push past 4.4%. We see in UK 30-year gilts at 28-year highs. So this is the framing in terms of how the markets are looking on a macro perspective. And now we have to see how, of course, what happens with, the most important thing is what happens with any resolution to the energy crisis and the Strait of Hormuz, because that drives a lot of these these effects throughout the inflation supply chain and how it impacts on monetary policy, which will eventually relate to how it impacts on cryptocurrency. But yeah, I mean, Bitcoin's currently staying at holding at about 82K. It's close to a very important resistance level at about 83 to 86K. So we'll have to see how things progress with the Trump-Xi meeting, as well as any resolution to the Iran conflict.
And then when it comes to getting your information, so I know that Coin Bureau has recently launched the Coin Bureau financial channel. So for those people that are looking to gain a little bit more formal traditional finance awareness outside of just crypto, there's a resource there. where do you guys go for your information? For anyone that's watching, obviously you really weigh the importance of awareness of the broader macro environment. Are there any key pillars or references that people can listen and make sure to bookmark on their laptop to keep up to date?
Guy?
Well, yes. I mean, gosh, how long have you got? I guess in terms of crypto content that I listen to religiously, I think the Chopping Block podcast. If you want to kind of get the the aspect of the industry, the opinions of the industry from people who are sort of right there on the money side of it, then I think that I think that's a great podcast to listen to. These guys are VCs, but they really know their stuff, and it's a sort of appointment listening for me. And then sort of in broader terms, I mean, I just try and get exposure to as much content as possible. You always need to be careful because some tends to be partisan and some is left, some is right coded or whatever. But I always, things like Bloomberg and the Financial Times, I'm always kind of hooked to. It's anything that gives you a bigger picture and some really sort of insightful opinions as well, because there's a lot of talk out there. There's a lot of kind of hot air, but there are only a sort of handful of experts who really do know what they're talking about. And so places like the FT and Bloomberg are go-tos for me in that sense.
Yeah, and I'll just add a few to that. And I would just add a few to that. I think that you mentioned the Chopping Block, which is a part of the Unchained stable of podcasts. There's also the Bits and Bips, which I regularly listen to. And that's this intersection with macro and crypto, which is great if you can frame things in the macro perspective and how it impacts on crypto. There's also Forward Guidance, which is of the Blockworks stable. That's more macro, but they also do cover crypto and how it intersects. Another favorite in terms of the TradFi space is the Odd Lots on a Bloomberg podcast. I also regularly read the FT, Bloomberg, Wall Street Journal are my three main staples when it comes to TradFi news and coverage.
Fantastic. So if everyone listening doesn't have time for all of those resources, just go over to Coin Bureau and everything will be covered. Okay, so if we go back over to crypto, because I saw some coverage from the Coin Bureau recently looking at portfolio constructions in crypto and the fact that they are getting a little bit more sophisticated. So I'm really curious to ask, what does a sophisticated or smarter crypto portfolio look like in 2026? What kind of trends are you guys noticing?
Well, I think before we can address the smart portfolio allocation strategy, we need to address what the old approach was and why it wasn't too smart. And I think that is when you first get into crypto investing, you kind of just have a bag of tokens, your hopium bag that you hope one of them moons in your moon bag, and you just allocate based on people. You get tips from people and you buy altcoins hoping they'll go to the moon. And that's how most newbies coming into crypto invest. But I think a new strategic and smart way to approach this is to think in terms of theses and then position size according to your conviction within that thesis. So, for example, I mean, for me personally, I think I would always advocate people should have a core position in Bitcoin. I mean, at least 30 to 50%. I think that one of the biggest mistakes people made over the past 2 years, especially altcoin investors, is that they had allocation only to alts and nothing to Bitcoin, which means you lost a lot of the Bitcoin rally from 2024 up to 2025 as well. So I think get an allocation to Bitcoin. It's a macro hedge, it's a store value, and it's got the deepest liquidity. And then I think also Ethereum, I think is the biggest altcoin. You need to have an allocation in your portfolio. It's a productive asset as well. You can earn yield on it. And then think about other satellite allocations like selective L1 and L2 exposure based on specific adoption theses. So how much, what's the actual fundamentals looking like? It can't just be based on vibes and what tips you get on crypto Twitter. And then I think you can still have a small speculative allocation to new narratives that you find exciting. So perp dexes and the AI and crypto intersection, which Guy mentioned earlier, RWAs, and then you can size accordingly based on your conviction within those narratives.
Fantastic. So I'm going to pick both of your brains quickly. I know you've both mentioned and alluded to slightly throughout the conversation some of the trends and narratives that you are noticing this year. From both of your individual perspectives, are there any narratives? I know, Guy, you've mentioned agentic AI and AI agents trading autonomously. Is there any other key narratives from either of you that you're watching? Maybe, Guy, we can start with you.
Yeah, and yeah, just to add to what I was saying about agentic AI and that intersection, I guess if you're looking for a specific category, then the X402 protocol, which is the technology that basically enables AI agents to make crypto payments. So that's a good and interesting category to watch, albeit extremely speculative. So a lot of very interesting early stage projects there, but very, very high risk. I think another big one, this isn't exactly a new narrative, but one that's certainly gaining a lot of traction at the moment is privacy. We've seen Zcash taking off once again. Monero has also been relatively strong. And I think there is just, I think as more and more people realize that actually, the idea that your crypto transactions are completely private and or anonymous is not true. This is a common assumption that people have, and especially people who, some of crypto's detractors, they say, "Oh, this is all untraceable. You can't tell where this money is going." Actually, you can. It's very, very easy for a blockchain tracking company, or indeed anyone with the right knowledge and software, to track where your money's going, where crypto is being sent to and from. And that has its advantages and it has its disadvantages. And I think that's one of the big reasons we've seen such an uptick in interest in privacy, that people will still and increasingly want to transact privately. And okay, you could argue that there might be some illegality in there, and there probably is, but there are plenty of people out there who want to transact privately for perfectly legal reasons, for perfectly honest reasons. And I think as more and more people understand that and understand what blockchain is and how it works, I think there'll be probably increasing demand for that. So privacy is another narrative to watch closely, I think.
Awesome. And Nick, over to you.
Yeah, I think, a really, really strong narrative, which I think it's obviously started last year, but we've seen it really proliferate more recently as perp dexes. I think right now it seems as if we've had one of those with the first mover advantage that's kind of grabbed all the mind share, and that is hyperliquid. And if you see how much traditional financial assets are being traded, how many perp markets there are for traditional assets on hyperliquid, it's really one of those products that has moved beyond just crypto adopters and the crypto natives into the wider traditional financial sphere. And then also, although it's slightly harder right now to actually get exposure to it as a narrative, but prediction markets. I mean, this is probably another one that's at one of the best product market fits out there for a crypto, which originally started as crypto native and the likes of Polymarket, is now the talk of the town everywhere for nearly every single event, and it's mentioned on news and everything. So I mean, we'll see if any of these prediction markets and platforms start releasing potential tokens for people to invest in, or if there's other opportunities to take stakes in that narrative. But those are two other very hot narratives to watch this year.
Fantastic. Well, Guy, Nick, thank you both so much for taking the time to give us a community run through of everything that you guys are looking at and why. It was such a pleasure to speak to you both again. And thank you guys so much for the time.
Pleasure. Thanks for having us, Jess.
Yeah, pleasure, Jess. Good to see you again.
That was Guy and Nick from the Coin Bureau. Huge thank you to them for the alpha and for the time. Now, next up, we're going to hand the stage over to arguably the backbone of Binance, the most important factor that we all keep in mind when looking at content, when looking at product, and much more besides. This is a message to our community. Community is, as you all know, the backbone of Binance. So this is all a message to you.
Blockchain 100 is a Binance initiative recognizing the 100 voices genuinely shaping the future of Web3, creators, educators, builders, and this show is their platform.
We don't give a what inflation is. So I came originally for the gains in dollars. And it actually took me quite a while to understand why Bitcoin was so important.
I think people just actually make stuff up, tweet it.
Bears sound smart, bulls make money.
I'm actually really excited to see how AI and crypto are going to integrate with each other.
I would rather take like humongous risk in the frontier rather than emotional death in a perfectly stable system.
More conversations like this one ahead, and we'll see you next time.
Every strong community is built on the people who make it possible. The ones who show up, step forward, and keep building. Binance Angels are a global network of passionate volunteers, active across more than 95 countries, every continent, every time zone. Wherever the community is, they're already there. Online, they're the first to show up. Offline, they bring the community to life, sharing knowledge, empowering others, different backgrounds, different languages, one mission. Ready to make an impact? Apply now.
How free are you? Think for a second. We tend to think we are, but are we really? These guys? What's yours? It's theirs. They control it. Your money, the fees, your data, and how you use it. Truth is, they own you. You and your story. Your hopes and dreams. Sad, right? But here's the good news. Welcome to Web3. Your story is yours and yours only. So go on, claim back what's yours.
And we are back, and now it's time for another session. Now, I have got word that we have hit a new record in terms of Binance Square concurrent viewers. We've hit over 500,000. So a huge thank you to everyone that is joining us across X, YouTube, and of course on Binance Square. Let's keep it going. Maybe send the link to a friend or family member. And I have also got word from the Binance Square team that are being incredibly generous today that there is going to be another red packet giveaway on this next panel discussion. So for those of you that are joining across the multiple platforms, make sure to head over to Binance Square. And then just a quick TLDR for how to activate the red packets. We'll be going live at some point during the session, so make sure to be paying attention. You will get a notification on the screen. Once the red packet does go live, there'll be a 2-minute timer. Claims are first come, first served, so make sure that you are quick. And there are plenty throughout the rest of the day, so make sure, and best of luck. Okay, it's time for our next session of the day. Now, when mapping out the agenda, we were looking to see what we could do to really provide some value to you, the community, in terms of research, crypto awareness, and the next steps into building your portfolio and upcoming trends. As we know in crypto, the phrase DYOR is really close to everyone's heart. Do your own research is incredibly important. Our next panel is BYOR, so building your own research frameworks with some absolute industry powerhouses in terms of research platforms. We have CoinMarketCap, we have Masari, and we have DeFi Llama. First, I'm going to bring to the stage Alice from CoinMarketCap as head of research, and I'm just going to give a run through of what Alice has been up to, because Alice, great to see you. How are you doing today?
Hi, Jessica. I'm doing great. Great to be back on here again.
So great to have you. And I know that we're going to be bringing you on stage in just a second with the other research partners, Masari and DeFi Llama, and you'll be giving a run through and hosting the conversation of what is going next in terms of building your own research frameworks. Before we do, I know that you've had an incredibly busy time at CoinMarketCap over the last few months, a lot of exciting product updates. So maybe before we dive in, 2026 for CoinMarketCap for you and the team, how has it been? Is there anything that you'd like to share with the Binance community?
Yeah, sure. You guys all know the market has been up and down and sideways for the past few months, but that didn't stop us from building. So the AI is the topic in town this year. So we have been building a lot on AI capabilities. We've been building AI hub. Now we have MCP servers, we have IDE integration, Exfo to payments as well, a lot of solutions for the developers. If you're not a developer yourself, still don't worry, because CMC has been putting out different dashboards, CMC AI, where you can ask directly on where the market is heading to, and you can get specific token analysis on each individual coin page as well. Not just that, we also had a recent upgrade to our API as well. This is the biggest upgrade we had for a long time and just happened in May this month. So what has changed, the monthly credits have been giving a boost, and now there is the rate limits per minute is getting increased as well. So users can now get better access to CMC data and make use of these powerful tools.
Such an exciting time. I know that you're going to share a little bit more with our fellow panelists on what is building and future trends in terms of research, building your own research, whether you are a firm or whether you are an end user. So I'm not going to hold you up anymore. We're going to invite to the stage Ryan, who's head of research at DeFi Llama, and then also Average Joe Crypto, who is research lead at Masari. Thank you both so much for joining today, and we're really excited for the conversation. How are you both doing?
Doing great. Thanks for having me. Doing great as well. Thanks for having us.
Fantastic. Well, we're thrilled to have you. I'm going to hand the stage over to Alice now and enjoy the session. Thank you all for joining us.
Thanks very much. It's a great pleasure to be here together with Ryan and Average Joe Crypto. It's great to really have you both on here. We have quite a few topics to go through, and it would be, I guess, let's start from the basics. I wanted to ask you, how have you been doing for the past, let's say, 2 months or so on the market? What do you think people are looking at the moment? Just a very quick takeaway on the market at the moment.
Yeah, definitely. I guess I could start here. I know, recently we dropped a big report on RWAs and kind of how they're being incorporated into DeFi. So I think that right now is one of the bigger trends we've seen, just from a, TVL perspective, that, on DeFi Llama, we have a new dashboard there. And I think it's been breaking new all-time highs just about every week now. So definitely the trend I think that's hottest right now is everything going on with tokenization and RWAs in general.
Amazing.
Yeah, definitely echoing off that point. RWA's tokenization was super hot. Something that's been super hot outside of crypto obviously has been AI. That's been ripping probably the hardest out of everything. We're starting to see some of that spill over into crypto at this point. Stuff like Venice and NDM have been doing well, and some other AI stuff. I think Dolphin or Pod has been doing good as well. So that's been the big trend. I would say where my mind is at is kind of it's a lot on BTC and the games that Sailor has been playing, and see if we can finally kind of form a bottom here. Yeah. It seems like we may have back in February going down to 60K. We're definitely above that, and there's been a lot of bad news since then and hasn't driven us lower. So I don't know if it's necessarily all green signals from here. Bullhead is on its way, but I definitely think we've done a lot over the past 2 months to kind of help set that bottom and perhaps find our base for the next year or so.
Yeah, and especially now crypto is getting impacted by all these different factors, not just crypto native ones, macro trends as well. I personally feel so many signals happening. So my first question, I guess, for everyone today is, if someone watching today wants to build their own crypto research framework, what's the best place to start with all these things that we just described?
Yeah, I'll start, and kind of an unconventional answer maybe, but I think the most important thing, especially if you're not accustomed to research, is starting with something that you have a particular interest in and you have a passion about. I think that's super important, especially when starting out, because if you're starting out researching on something that you don't really care too much about, it's not going to be enjoyable. So my first piece of advice to anyone, whether they want to get into the research business or, they're just researching on their own for their own portfolio, is start with something you enjoy, and I'll make it a lot more easier. And I think with AI and how much information is like being commoditized, like it's important to start with the basics and like make sure you have the foundation correct. And I think at least like first piece of advice I have to everyone is like at least start with something that you care about, you're interested in. It'll pay dividends down the line because you're actually going to be enjoying your time starting off and whatnot. So I think that's super important in just like terms of just like general basic advice. And then from there, like I think AI is a great power tool, but you don't want to be using it as, you know, kind of your end all be all. Like you want to, again, like information's commoditized. AI can get whatever piece of information you want, but how do you know what is the information you actually need, right? So I think it's important to kind of like develop your own taste as well and like actually come to your own conclusions and don't just let some AI chatbot tell you like, hey, this is what you should think about X, Y, and Z and whatnot. So I personally, when I'm starting any research process, like when I'm researching anything, I try to avoid the use of AI to start and like just try to come up with my own conclusions and like initial hypotheses. And then from there, if there's, you know, a topic I don't understand, if I'm reading a very math heavy white paper as not a person that has a strong background in math, like that's where I'll break out Claude or something, try to get it to understand it for me. So that's like some good general basic guidelines that I try to strive by.
Yeah, definitely. Yeah, I feel like sometimes it's so easy to get lost in trying to use the tool, the AI agents themselves, and instead of just actually doing the real research on the topic that I wanted to do. So I guess there's a lot of noise in this market, and one way to build your research framework is to separate the noise with the true things that you wanted to do. Interesting. Ryan, I don't know how you approach this. What's your research framework?
No, I definitely think what Average Joe's was saying is spot on. I mean, if you're not interested in a topic, you know, starting research on that is going to feel like a chore, and that's definitely not what you want if you're looking for the most insightful kind of you know, things that you could pull from it. I know, you know, when we assign an analyst to a report versus them picking a topic, like it's a totally different, you know, output that you get there. So definitely agree with him on that. I think another really big part, especially in crypto with how social everything is just getting feedback from others who are researching that same topic. So maybe there's different things that they've explored that you haven't yet. So it's really good to get that kind of, you know, back and forth where, you know, maybe you spent the last like couple weeks diving into a topic and then going and discussing that with someone else within the space. I think definitely unlocks a lot of things that maybe you didn't think about before and really gets to the point where, you know, your research is very insightful and presents ideas that haven't, you know, really been thought about before. So I think the passion is the first step, and then kind of building on that with, you know, who else is passionate about this that I can talk to. So yeah, that's kind of my take on it.
Good point. Good point. And as I mentioned, like you touched a really good point on don't just follow the headlines and narratives, but also you mentioned, you know, talk to the people that might be familiar with this matter and just use different channels to do this. That's quite a good take. Okay, so I also wanted to ask, when a new project starts gaining attention, right? When I really hope, by the way, when altcoin season comes back and then we start to look at individual projects again. I just wanted to ask, when a new project starts to gain attention, what are the signs that has long-term potential for this project and it's not just a hype? What are the specific things you are looking at?
Yeah, I think personally, you know, looking to see if the traction they've got is organic. I mean, a lot of times, you know, a project will launch, maybe they have a big incentive program or, you know, offering different rewards, or people are farming, you know, a potential airdrop. You know, those metrics can be, I don't want to say manipulated, but obviously they're not painting the full picture there. So, you know, really looking into the data and trying to understand, like, you know, if there are 1,000 users, like how many do I estimate of actually being like real people that are using this project because it's a good project and not to try to get some, you know, financial gain or something from it. So I think, you know, really looking into like, okay, is there usage? Is it being retained? Like, is this happening over a consistent period of time versus just like, okay, there's a big burst in activity, it's dropping off a cliff. You know, maybe this project or this trend isn't going to stick around for too long. So really, I guess looking at the data with a real sense of scrutiny to see if those, metrics are really going to stand up in the long term.
Nice. Yeah, to add on to that, I definitely think like data metrics are super important. And then like obviously with altcoins, especially if it's early on, like so much of it is not necessarily about the project itself. It's about like who's actually building the project, the founder and the founding team. It's not always easy to get an audience with them, but generally if it's like an early on project, like these people want to talk to anyone about what they're building, just go talk to them, see if they have a good handle on like what they're actually selling you and whatnot. Having like a good founder is just so important in the space. And like if the founder, you talk to them or you on Twitter or something, like they seem very knowledgeable, they actually like enjoy the product and they're not just like everything's about an airdrop or something like that. I'd say that's so important. I think some of the best performing altcoins are strictly because their founding teams are really strong and whatnot. And if you can somehow get an audience with them and whatnot and just talk, and like it's not even the talk doesn't even have to be about the project, right? It just has to be about how they think and how they operate. And if you can get a good handle on that, that's so important for determining like long-term success in the space.
Yeah. And I think even to that point, sorry to cut you off, Alice, but like crypto is one of the few places where like you can go on Telegram and talk to a founder almost immediately. So like, I feel like a lot of people I've spoken to are like almost shy to do that, but like that's what makes crypto so awesome is like you can go talk to like some of the best devs today and you might be a quote unquote like nobody. So, it's really awesome to have that ability.
Yeah, I did get scared sometimes that I didn't reach out directly to people, and also I don't know how many people actually reply all the DMs, but I try and I got some feedback, so that's good. But also interesting, just to add on top of that, speaking to the team is very important. I found in this market cycle, what's so different is looking at the product itself. If the product is great, it's generating revenue from the get-go. Like that is likely to build a very good foundation for later on the project to take off. Because yes, back then we looked at big VC backings, we look at QL support, but now in this market, especially to be honest, even in the AI arena as well, it's so easy to have one-person companies that are very successful and products. If it's really good, it's getting traction on GitHub, it just takes off from there. So I think that's one of the special things I found in this market cycle. If it's a great product, people use it, it generates revenue, it takes off from there. So I guess that's a really special one, the blessing one we have for this market as well. On that topic, AI. Right, because at the beginning you both mentioned AI is very important, and you guys are making great momentum on the product itself. AI is becoming part of everyone's workflow now. So how can people use AI to become better researchers and do their own research? So I want to get your point of view on two aspects. First is how you do it personally, and second is maybe some of your products, because I'm a big fan of both DeFi Llama, Masari, and also CMC side, we have some great tools as well. So how do your users, the behavior you see that they tend to use this very successfully?
Yeah, I'll start. So I'll say the first thing, it's kind of paradoxical, but it's like, make sure that you're actually not outsourcing the research part of research and the thesis formation to AI if you're a researcher in the space. And if you do that, no one's going to want to read your stuff. No one wants to read AI slop. That's not to say AI isn't super important, but under no circumstances can you outsource your thinking to AI. Like that is, for me, a no starter. You've kind of just destroyed the process. So what you should do, however, is like once you form your thesis and like once you have some hypothesis, you use the AI first to kind of test that, run it through like, hey, I believe X, Y, and Z. Maybe are there any academic papers written on this or any other counter viewpoints and whatnot? I think that's always a great way to use AI. Personally, like where I end up using it the most is just like editing. Like I'll basically write up, like a page of my report or whatever. Be like, hey, please just check this for grammar, structure, flow, whatever you do. Under no circumstances, change out my voice, change out my ideas, just like be like my copy editor. I think that's been super helpful. The other area that it's actually been probably the most helpful for me in just like pure time reduction has been like creating graphics and designs. I was absolutely horrible at this. Like it would take me days just to make like a chart. And Claude is just like a million times better than me. So I think to sum this all up, like in the research side of things, you don't want to use AI to replace the research. You want to use AI as like kind of your personal editing assistant, graphic design assistant that can help like take your existing work from 90 to 100 rather than going from like 0 to 50 or something like that.
Makes sense.
Yeah, definitely agree with pretty much everything you mentioned there. I'd say one of the great things, and I know, I think last month we launched our Llama AI product, and we've been using that a bunch. So it's custom built on all of the backend DeFi Llama data. So it's got a lot of, I guess, awareness. So something I really like to use it for is kind of like discoverability of different research topics. So, you know, maybe there was a hack recently and I want to ask like, hey, you know, what protocol saw the biggest increase or decrease in TVL following this hack? Like, you'll be able to unearth a lot of, you know, that surface level data and then be able to dive in a little bit deeper after that. So like, you know, if there's a big hack and a specific vault maybe gained or lost a lot of TVL, like why did that happen? Like as a researcher, you're able to save a lot of time on that front end and actually dive in and get into kind of more of the nitty gritty afterwards. So I think it's really good at that part too, where, you know, you can throw a couple of like very basic ideas at it, get a quick answer, and then be able to dive in a little bit deeper on whatever, you know, might pique your interest from that.
Yeah, agree. I think the researchers really winning with AI on the ones asking, should I buy X? Instead, they're asking, here's my analysis of XYZ, like what am I missing? That type of approach of breaking down data aggregation to, you know, pattern recognition, etc. It's very important. But I guess my point I want to make here is you gotta feed good data to AI to have good output. So making sure you're like when all the listeners out there, when you're using AI tools, make sure you take aggregation of different data sources. You know, make sure you don't just look at trading data, you look at on-chain data, you look at some other aspects as well. So yeah, the good inputs leads to the good outputs. So yes, that's the trick I personally use. The final part of today's panel, I wanted to ask about markets, and that's one question on the crypto market and the other question on traditional market. So I'll start with crypto market first. Since I have the top researchers with me today, it's such a great pleasure to have you both here. I'm gonna ask you, what indicators do you look at to identify the markets where we're heading to at the moment? Because I have no idea. I thought we were above 82K this week. I thought we were off for a great week, and then we have, you know, CPI, PPI, and everything. Anyways, what indicators do you look at, and where do you think we're in the market right now, and where is this going?
Yeah, definitely. I mean, I think we kind of touched on it to start, where, you know, the market seems driven mainly by Sailor and kind of the TradFi ecosystem. So ETFs, is Sailor, you know, buying $500 million this week, or is it only, I think this week he only bought like 43 mil. So, I mean, obviously right now, a lot of the market movement is determined by that. So, you know, looking at those headline numbers each week, trying to monitor ETF flows, see what's happening there. But yeah, I'm with you. I mean, I think the worst of it's behind us, but, you know, maybe a few months of just kind of bouncing around here, but it's just hard for me to see a sustained move either way with so much uncertainty in the world, you know, with the Middle East and everything going on there. I know the Clarity Act is rumored to be, you know, on the floor potentially this week. So, you know, there's a lot that's kind of in the air. And I think some of that needs to be settled before there's, you know, strong market movement one way or another.
Agree. And
sorry, to add to that, kind of more internal to crypto and maybe more localized, I think, and this is not exactly like a defined metric, but kind of the market's willingness to either like bid new projects or try out new stuff, I think is like always a pretty good indicator when things are starting to turn. For example, like you kind of saw this in like February, March with like HIP3 markets, right? Like HIP3 markets started taking off, and that's kind of around the same time we bottomed, right? So I think it's very important to kind of pay attention to like what the market is willing to either be buying or participate in new projects, new DeFi projects and whatnot. I think that's like always a really good indicator. You can go back many times, like 2024, that was like Eigenlayer. that started around the turn for like Ethereum, and basically everyone was bulled up on Eigenlayer. But it doesn't necessarily matter so much what people are bulled up on, as long as like, hey, there's new things in crypto to try out. There's new projects to bid. Like, let's go actually do said things. I think that's always like a really good indicator of like altcoin sentiment, is just like, is there new stuff that people want to try out? And if the answer to that is yes, there's typically a changing of the guards going on.
Agree. HIP3 is such a special thing, because I was looking at the data today. Right now in the market, apart from crypto trading, RWA perps is a big thing. Prediction market is another big thing. A lot of liquidity volume in that. But what's special about RWA perps is that it's not crypto. It is crypto and TradFi. So that I'm looking at that thinking, crypto started as an alternative to traditional finance, but now the two worlds are becoming much closer. And do you think this is crypto still disrupting the system? Are we building on top of this? Are we just how do you feel about this combination thing? Are we slowly becoming part of the TradFi system?
Yeah, I'll start with this. I have a lot of mixed feelings about where this is all going. To be candid, like I got into the space because I'm a cyberpunk and libertarian ideology. So I'm definitely not one to like be proud of the state. But I think what's interesting is I think crypto is going to be kind of like splitting into two paths here. And I think the path that most people are going to take is kind of going to be this alignment with TradFi and traditional markets, and not necessarily be a alternative to them necessarily, but how do we improve the existing system? And I think that's noble, fine, and great. And like, there's definitely a much better world in that scenario where crypto is a part of the traditional financial system, and it can provide better products to consumers, lower costs and whatnot. I think that's where the majority of the space is headed. Not a good or bad thing. That's just simple facts, I think. And I think the road that's going to be far less traveled is kind of like the return to the original ideals behind crypto. And I think it's kind of just a reflection of who the market participants are. I don't think there's a lot of people that actually really want this stuff anymore. I definitely think there's strong demand for, like a non-sovereign store of wealth, right? Like Bitcoin, Zcash has kind of been entering into that conversation. But outside of like these store value, store wealth assets, like there's not much demand for like truly completely immutable, decentralized finance, right? Like we saw this with the Aave hack. It was all about like, how do we get back the funds from North Korea? And it was like Arbitrum was able to basically change the state, take the funds back. And I think by and large, that was a good thing. I'm not saying it was a bad thing, but I think that where this market's going, there's going to be very two clear paths. It's either like you're aligning with TradFi and you're going to improve their systems, great. And a smaller niche of the market is going to be like, no, let's return to our roots. What made crypto in the first place? And it's actually, we're building a completely alternative system. So I think to kind of sum up my point of view on this is that there will be both worlds, but I think the majority of capital, resources, time spent will be on kind of merging with TradFi rather than building this alternative system.
Yeah, I mean, I think you hit it spot on. I think right now crypto kind of has an identity crisis, and there's two paths, and I think there's going to be less of the middle and more of you're either going to go full-blown kind of TradFi or full-blown kind of the core crypto ethos of like privacy, decentralization. So I think all that kind of, fake kind of crypto ideals that we've seen in the middle of the last couple of years with, L2s and different things like that. I think the room for that is going to be a lot smaller, and it's going to be a clear kind of dichotomy of like, here's kind of the TradFi version of crypto, and then here's like the core kind of, nerdy group of crypto, if you will, which I think could be good overall, and, excited to see what that kind of looks like. But yeah, I mean, you can't deny that things have definitely changed over the last year or so here.
I call this research inflation, because back then I only need to look at EIPs. Like now I got to look at macro and everything, and PPIs and all that. But yeah, it's really good because this is why we're coming back to the beginning of why AI is the topic in town right now, because literally without these tools, it's going to take us so much effort and like insights and knowledge to be able to be good at doing crypto research or investment research in general. But now with all the data available, especially provided by crypto, like the transparency of data, the open decentralization of data, we now have access to all this capabilities to do our own research, build your own research, not just do the research itself, but as Average Joe Crypto mentioned, the framework, think about what you want to research on and build that framework from scratch. So that's really awesome to have. I have the last 2 to 3 minutes. I wanted to get a quick one line from both of you to say what you are most excited for the next 6 months or so, and maybe just any piece of advice you have for the listeners today.
Yeah, I guess I'll take it away. I know, this week we just announced that DL Research is moving to DeFi Llama under the DeFi Llama research name. So hard for me not to be most excited about our team and what we'll build over the next 6 months here. So I guess that's my answer for that. And I guess for advice, just be patient. I feel like, the market's still kind of figuring itself out, and no need to rush things here. So anyone listening, that would be, my advice to you right now.
Yeah, for me, I would say I'll give my most excited about something more market related. Definitely most excited about privacy in crypto. It's awesome to see that privacy is back as a narrative and as a theme after eating shit for lack of a better term for many years. And this goes beyond just like Zcash Monero. I think a lot of projects are now focused on like how do we bring privacy to our chains and whatnot. So that's where I'm most excited about. That definitely like aligns with why I got into crypto, is kind of like being able to have freedom and decentralization and privacy. And now like the market actually cares about that again. So that's great. Piece of advice for anyone listening, watching, bear markets and like slower markets are like the perfect time to like dive deep into something. And like, you actually don't just have to be staring at headlines 24/7 and following charts. So for me, like this is the time where find something you're passionate about, find something you're interested in, and just dive super deep and try to become an expert on it, because it'll pay dividends down the line once that's topic or whatever is back in the limelight, and now you can be the expert on it. So yeah, it's like, to sum it up, privacy and just find something you're passionate about. And I think that's excellent. Where to go.
Amazing. I'll just add a bit from my point of view. For the next 6 months, I don't feel bear market actually, because when crypto is not trading, I'm trading stocks, I'm trading memory stocks, I'm trading commodities and all those, because now a lot of the perps, RWA perps are available on a lot of platforms, Binance included. So users have a lot to play with. That's awesome. And what I'm also excited about is building all these AI agents and tools to help me do my research, getting all the data from CMC, from DeFi Llama, from Masari, and like every day when I open my Cloud Code and trying to build something new and cool, I really enjoy that. So yeah, that's everything. And I hope everyone enjoyed the panel today. And thanks so much for Ryan and Average Joe Crypto to join us today. And yes, have fun and enjoy the rest of the event.
Yeah, thank you for hosting, and thanks to Binance for having us here.
Yes, thank you.
How free are you? Think for a second. We tend to think we are, but are we really? These guys? What's yours? It's theirs. They control it. Your money, the fees, your data, and how you use it. Truth is, they own you. You and your story. Your hopes and dreams. Sad, right? But here's the good news. Welcome to Web3. Your story is yours and yours only. So go on, claim back what's yours.
A great session there from DeFi Llama, Masari, and CoinMarketCap on building your own research framework in the crypto landscape. Now, our next session is particularly exciting. So for any of you that are joining on Binance Square, make sure to keep a close eye. We do have another red packet drop for any of you tuning in on that session on a first come, first served for some free crypto up for grabs. Now, what I'm going to do next is I'm going to invite our moderator to the stage to ask him about the industry in 2026 and much more. I'm going to bring to the stage Gareth Jenkinson, who's head of multimedia at The Block. Gareth, first of all, great to see you again. How are you doing?
Thanks so much for having me, and congrats on the live stream. It's been 3 very successful hours. I've been listening to all the speakers, and yeah, particularly enjoyed the conversation between CZ and Chamath, and I was taking notes here in the background.
Yeah, I'm glad you enjoyed it. There was a lot of alpha over the past 3 hours. I think this is the final hour and the highlight session. So thank you so much for joining us. I know we have our special guest joining in just a moment. Before we get into it, Gareth, just a really quick summary. I know you've been really busy. I can see from LinkedIn and X, you've been traveling around, hitting a lot of the crypto conferences. Obviously, this is online, so we're streaming to around 86 different countries at the moment. And I'm curious to ask from the kind of sentiment on the ground at some of the crypto conferences that you're going to. But for those of us that don't get away from our desks much, how's everything been? What kind of trends are you noticing? Is there any kind of conversations that you're having at the IRL events that you can share with us here at Binance Online?
Yeah, sure. I've been on the road a little bit. I started off my kind of spring/summer in Cannes for ECC. And a few weeks ago, I was at Paris Blockchain Week. That's where I caught up with Adam back in real life most recently. And then I was in Miami last week for Consensus, which was really great. To be honest with you, I definitely got the feeling that we are in a bear market, but not in a bad way. I've been in the industry as a journalist since 2017, and you typically kind of see a lot of the fluff and the froth disappear from the industry, and people that are like actually building products and services that have meaning remain and are visible in real life and online. It was very much the case, and yeah, I thought last week in Consensus in Miami was really great as well. I had some fantastic conversations with lots of different industry leaders, and yeah, the event was well attended as well. And I do get the feeling from all of these conferences that TradFi has kind of really arrived in our industry, and I don't want to say taken over, but definitely the majority of people in the room seem to be, wearing suits and from a corporate environment, which is good and bad depending on how you look at it. I think if you chat to someone like Adam, who I will be in a few minutes time, and you want to talk about the cypherpunk roots of our industry, maybe we're kind of straying away from that. But I also think that this was the inevitable outcome that a lot of people were calling for, that we start using more decentralized tools and services to conduct finance and share information on the internet. And that's the point at which we're arriving. And the traditional kind of finance system and conventional business is catching up with us. They're clued up, they know what's happening, and they're in the room with us now. So that's my general 2 cents on what's been going on. And I'm very bullish. I'm still very excited to be a part of the industry and part of the storytelling. Despite the markets being kind of down, I'm very optimistic.
Well, thank you for hosting so many conversations around the space. I know a lot of people get educated and informed from your content. So with that in mind, I'm not going to take up any more of your time. I'm going to leave the stage and bring the special guest, Adam, back and let you both take away the conversation. So Gareth, thank you so much for joining. Adam, thank you for joining. And I'll hand it over to you, Gareth and Adam.
Perfect. Thank you. For those of you that don't know, of course, we're joined by Adam Back. He's the founder and CEO of Blockstream, and of course, the inventor of Hashcash. He was cited in Bitcoin's white paper, and he was one of the early figures in our industry that actually, traded messages online with Satoshi. Adam, it's good to catch up with you virtually this time. We were together in person in Paris a few weeks ago, and for anyone that's looking for more information on that, you can catch our full interview on the Blocks platforms, YouTube, X. You can find that interview. But first things first, how are you?
Yeah, good as usual. Always a fun time in Bitcoin. What's going on?
Yeah, definitely. I know you were also crawling around Miami last week for Consensus, and probably just as busy as I am. It's great to be seeing you out and about and really leading from the front when it comes to representing the Bitcoin industry as someone who knows it as intimately as you do. When they were setting up the agenda for this talk, the title was "Why We're All Satoshi and What's Next for Bitcoin." And we've had some great conversations over the years, and I want to take you back to the early days of Bitcoin's development. You're one of a handful of people that are cited in the Bitcoin white paper. I've never asked you this before. Can you take us back to the first sort of interactions you had with Satoshi and the conversations, the short conversations you had over messaging, and what he kind of asked you about before he actually published the Bitcoin white paper?
Yeah, so I mean, actually, I eventually released the emails to the COPA trial, where where the story is, we are all Satoshi, and some people will add, except for Craig Wright, because he's the infamous kind of instigator behind that trial, where COPA ultimately financed the defense and prevailed in this case. So the people can look at the emails if you search for COPA and my name and emails Satoshi or something like that. This was in August 2008, so a few months before Satoshi published the first the white paper draft publicly. He sent me a link to an earlier draft of the paper, I guess, ultimately, and was initially just asking about the citation. Is this the right way to cite hashcash? And I was like, because it's not, it's not published in a journal. It's kind of tech report that I wrote and put on my website, right? And so I was like, sure, that looks good, but you should have a look at B-Money because it sounds very related to what you're talking about. It seemed like he didn't know about B-Money. It's got a little bit ambiguous, but generally looked like it. And he immediately, Wei Dai released the email exchanges that he had with Satoshi, and Satoshi turned around like the same day, next day, emailed Wei Dai and asked him, what's the correct citation for B-Money? So, he must have looked at it and decided this is worth citing, added it to the citations, and did the same thing to Wei Dai, say, what's the correct way to cite this? And, some people have said things like, oh, Wei Dai helped Satoshi with B-Money, with Bitcoin, and Wei stepped into that conversation and said, no, he didn't even seem to know about B-Money, so I clearly didn't, right? So, and then on the forums, of course, it turns out that Satoshi later said on the Bitcoin Talk forums, maybe some other places, all of my exchanges were emails, by the way. There's no interactive chat with Satoshi. And so, later times, Satoshi posted on the Bitcoin Talk forum. I was kind of, focused on other startup stuff at the time. So I caught up with this in 2013 or 2012, something like that, he had to implement Bitcoin before he wrote the paper. And as far as we can tell, I was the first person to receive an email from him. And somewhere else he said it took him 18 months, right? So, that would be starting in January-ish 2007, implement it. Presumably it took a little while to write the paper, email me the paper. He started to, fill in the citations, get initial feedback from people. And so that's the context communication, and it continued. There's a few more, I sent him another citation for some other kind of hash-based electronic cash system by Rivest and some other cryptographers called Micromint. And then he sent me, a download link. You might want to try it out. I'm about to start the network, which I unfortunately didn't do, or I might have some, first day block coins, which I'm not sure. I mean, there are clearly a lot of miners in the first year of Bitcoin because, even if you accept the maximum estimate from a Satoshi pattern, there were 2.5 million coins roughly mined in 2009. Presumably the Satoshi pattern continues after that. And, so there's 1.5 million that's not him. So there's lots of early people who mined. Dustin Trammell, who's somebody who's spoken up about that. It's interesting to listen to his podcast discussion about the experience before he got bored and went away and then came back some years later and found his, dug up his wallet.
Yeah. I also went in a bit of a rabbit hole on the Satoshi pattern quite a few years ago, and I wrote a feature for Cointelegraph magazine, which which is still live on Cointelegraph's magazine if anyone's interested in reading that, and had a long discussion with Sergio Lerner about his work to try and identify the passion, and it just super interesting, and that's actually for those that don't know, that's how we actually figured out an estimate of how many Bitcoin actually belong to Satoshi, by sort of identifying a pattern in the way that he hashed when he was mining to figure out how many coins he'd actually mined himself. Adam, I wanted to ask you a little bit about those conversations. Did you realize that Satoshi was going to use your proof of work approach that you implemented in Hashcash in the early conversations that you had? I mean, had he intimated to you that, hey, I think that this is the best way to do this?
Well, I mean, obviously, it became evident that he'd already used it. Right? So he'd implemented the system, he'd used Hashcash, increased the precision on it a bit, which is something contemplated before, but not, you didn't need that kind of fine level of precision for the previous use cases. It was okay that the difficulty would adjust by a factor of 2. And so, yeah, that was actually the topic of his initial email, which is, I'm using Hashcash. Is this the correct way to slice it? And, I learned enough about Bitcoin to understand that he'd solved some problems, because, the idea of using Hashcash to try and build a decentralized eCash was not new. That was, there was already discussion of how to make a decentralized eCash before I introduced Hashcash. And one of the stumbling blocks, the reason people were trying to make a decentralized eCash is they'd seen a centralized system fail. I'm very disappointed. Object lesson is centralized systems are a weak point. We need to figure out how to decentralize this and then build a new system and deploy it. And so when I introduced Hashcash initially as a kind of postage stamp technology for anti-spam and anti-denial services, it seemed to occur to lots of people, like a dozen people or something, on the discussion list that I posted on, which was the Cypherpunks list, within the first few days of posting it. It's like, oh, the problem with decentralized eCash in the past was a peer-to-peer protocol can't have a bank account, right? But now with this proof of work concept, hey, we could mine the coins. And I was participating in these conversations, and there are people that have done a lot of reading and cataloging these early conversations that sound somewhat Bitcoin similar, but they're missing some components of the design that Satoshi figured out, basically. So we tried, and we didn't quite make it. But you can see the conversations in 1997, during the month after the Hashcash paper. Then you can see Wei Dai posting about B-Money about a year later. And somewhere in there, Nick Szabo also posted about BitGold, but I think that was another list, so I might not personally have seen that until a bit later. So, and some people say, well, why didn't Satoshi cite BitGold? That was my fault, because I should really have remembered and pointed out, look at B-Money and BitGold, because they're sort of relatively similar concepts. They're all using Hashcash in a proposed way to do this. But, there were some 1997 discussions that sound similar as well. And John Carreyrou, in his long article, had, spotted some of the similarities in those even early discussions before B-Money. And that seems to be, the case. And of course, Aaron Van Wirdum wrote his book, the Genesis book. And there's a chapter on the pre-Bitcoin similar ideas, like proof of work related electronic cash. And RPAL by Hal Finney is another one that's in 2004. So there's, initial discussions in 1997, same year as Hashcash. 2 slightly more concrete proposals in 1998, B-Money at BitGold, Wei Dai and Nick Szabo. And then by 2004, Hal Finney implemented a different twist, also proof of work based, but centralized, however, using trustworthy computing, which was new at that time.
Yeah. Look, I think if Satoshi had referenced everyone, that would have been a very long reference list. So you probably had to try and keep it as short as possible.
Well,
you mentioned the new. Go ahead.
Yeah, I mean, I think he just. It seemed like he'd I don't know how he arrived at the idea, right? But he didn't seem to be aware of B-Money. I think BitGold was a little bit harder to find, and B-Money itself was only posted on a web page. Brief discussion on a few cryptography lists, right? So it'd be pretty easy to miss. So, that's fair enough. But a lot of people knew about proof of work because spam was a hot topic, and it's an ongoing nuisance. But now we have more heuristic spam control features, which kind of work plus or minus. So anyway, it's interesting to see that he basically adapted the citations because I sent him something and I didn't send him the other things and he didn't cite them. So there we go.
Well, I also just to tack onto that, I find it amazing that he designed the protocol that he did not knowing about these earlier works in sort of, you know, decentralized money, which said something about the innovation of Bitcoin in of itself, is that it didn't need to take all the best and all the failings of all the other, you know, implementations of decentralized money in building what he built in Bitcoin. And maybe it did take a fresh mind that wasn't, I don't want to say tainted, but influenced by all the other projects that had tried to do it.
Yeah, I mean, you know, of course, people look at Bitcoin as a design and it's elegant and you can understand it at different levels. And so when you see something and you can understand it, some people's intuition is, oh, I could have done that. But, you know, we tried. A lot of clever people tried in 95 to 2005 and didn't quite make it. But, you know, on the other hand, to your point, you know, one of the debates is Bitcoin invented or discovered. I think the, you know, sort of parallel track suggests it feels more like a discovery. And the other thing that makes it feel like a discovery, it's very mathematical, right? And if you try to modify the design, which I, you know, spent some time trying to figure out in 2013, it seems like if you change very much, it stops working. So it exists in a very narrow area of design space, which also maybe partly explains why we didn't figure it out, you know, before the people involved before didn't quite figure out how to make it work. And I thought also we were looking at it slightly the wrong way. You know, the previous system, the centralized system that failed was a stablecoin, literally. You'd send a wire transfer and, you know, that's why we're like, oh, it's a problem. It's a peer-to-peer protocol, can't have a bank account. And so, at least for some of the thought process was, how do you make a proof of work-based system price stable? And of course, that makes it harder. So I think, at least for me, that was an ingredient in, you know, not seeing some of the, one of the features that Satoshi introduced, which is just, you know, make an engineered mathematical rate supply, let the market price it. But, you know, I wouldn't say that's the case for everybody, because I think some of the other people in that discussion were kind of gold bugs, right? So they probably like independent hard money as a concept. But I think it's quite common that you can, part of the design challenge is asking the right question. And in hindsight, when you see the solution, it looks obvious that this is how it should be designed. But at the time, people are kind of fumbling around in an infinite search space, trying to figure out by imagination, where could there be a solution lurking, or does it even exist, right?
Yeah. Yeah, look, I think hindsight's always like pure, you know, clear sight. And like you say, you don't know until you've figured something out. Look, we've spoken at length about the New York Times piece that claimed that you are Satoshi, and I don't want to you know, flog a dead horse, because it's been spoken about so much in recent months, and you've done so many press appearances. But my only question on that is, do you think it actually matters if we know who Satoshi is, and do we ever get an answer to that question? And could it be quantum that does that, before we get into the quantum stuff?
Yeah, I mean, I think it's actually beneficial for Bitcoin that Satoshi stopped participating in the forums, and it remains a mystery. So he stopped participating sometime in 2011. So I only, you know, got more actively involved in 2013 and went back and read all of his old posts to try and, like, you know, glean what information or insights you could about how Bitcoin worked and why, as many other people do when they go down the Bitcoin rabbit hole, right? And so I think it actually helps Bitcoin be viewed as a discovery, as a kind of bearer, hard money, gold-like. Gold was also presumably discovered by some Neolithic humans, right? And it's like literally a Neolithic era shiny rock, but it's remarkably resilient, right? So I think Bitcoin, like a lot of things that go from the analog to the digital, when you go into digital, you can design a better and more robust version of the analog thing. So I think digital gold is ultimately the best simple way to explain Bitcoin. So I think, yeah, it's good that we don't know. I suspect we won't know, because a lot of people looked at the digital footprints from 2009 to 2011, from when Satoshi was, you know, posting on forums and emailing, and didn't figure anything out, nothing definitive, right? So it's a very cold trail. And what people are writing about more recently is sort of speculative backfilling. Like this person, how Finney did this, Adam did that, other people, Waydai did this. What do they know? Are they C++ programmers? What spelling do they have? What time zone were they in? It's all like speculative, and it's quite possible, probable even, in my opinion, that it's somebody that isn't even on the sort of recognizable list of potential candidates, because there are lots of clever people in the world, some of who don't have a very chatty online footprint. And during this period, like 1997, I was a very active online presence. I was very interested, fascinated with privacy tech and electronic cash and the cypherpunks mission. I still am, and the but there are other people who are not so talkative online. I had free time on my hands. I was a postdoc, so not somebody. Some of the other cypherpunks were a bit older than me, like Nick Szabo is older and so on, and I think they were already working in industry for like 5 or 10 years.
Yeah. Look, let's talk a little bit about the quantum thread, and just for the audience here, those that might not understand what the quantum thread is to Bitcoin, is it really the point at which we reach quantum computers getting good enough to break ECDSA signatures and steal Satoshi's coins? Is that really what everyone's worried about?
Yeah, I mean, I'm not sure exactly which physicist first proposed it. I think Richard Feynman, famous advanced physics guy, contemplated the idea. It's something that's been around for a while. I first learned about the mathematical concepts and the algorithmic capabilities of a quantum computer. So you've got different types of hardware. You've got a CPU with a single core. Now you have GPUs with hundreds or thousands of cores. That changes the game. You've got distributed systems where you've got thousands of cores connected by high-speed instant connection. You've got different computer architectures, but they're all what's called von Neumann machines. And quantum computers is using some quantum physics effect to hypothesize that we could actually have a type of computing that could be faster than a von Neumann machine in a systematic way, exploiting some aspect of quantum physics with entanglement, where it could search a search space. They're particularly good for search problems. Swapping parallel and multiple universes would be one way to interpret that, or some kind of quantum effects. Sounds very science fiction, but some of these effects have been like theoretically and empirically proven to be the case. But nevertheless, it's extremely challenging to actually achieve a large-scale system that retains a quantum effects. Quantum effects tend to disappear rapidly when they interact, when they're observed. And so the hardware research has been going on since I lived in Montreal back in the early 2000s, and there were some of the top sort of mathematics researchers looking at quantum computing at the universities there. And so I went to some master's courses on explaining the mathematics. And so since then I was kind of loosely tracking how's the quantum hardware progressing. And it's been fairly linear, It's been 25 years since, or something like that, since I sat in that course. And, every year or two, there'll be another bit, be like 6 bits, 7 bits, 8 bits. And I suppose that's just one aspect of it. There are many complicated and subtle aspects. So at this point in time, there are multiple candidate architectures. You can build it out of trapped ions, you can build it out of this, you can build it out of that. And each of those candidate architectures does better or worse on some criteria, but there's no kind of combined cohesive architecture that actually gets anywhere viable yet. So to my mind, we are still in the kind of early research phase, sort of like before the first silicon chip, the first ASIC, the first CPU, where previous to that, and I think this is like 85 years ago or something, they had a vacuum tube. So like a large glass tube that could behave like a transistor, and they would create on a tabletop kind of massive circuit that could do very minimal things. So it feels kind of, that's roughly where we are in the quantum. So when they arrive at whatever the architecture is that, assuming it exists, that can scale, then we're going to find out if it's scalable in practice. Because some of the issues with scaling keeping more bits entangled create knock-on problems. It creates more resources to do error correction. They become less stable. The error builds up faster, or they decohere too quickly. A classical computer doesn't sort of spontaneously fail after 100 microseconds, where currently they do for the most part. Now, if you tell somebody from the hardware side of it, the coherence time is 100 microseconds, and the clock rate is roughly this, so that's why they can only factorize the number 15 into 3 times 5, because it will decohere before they complete. And they will say, oh, no, there's a system which has more coherence time. But if you go look at which architecture was that? Okay, but it has some other defect. So this, you can, because research is all about reaching a new target in something, right? So to get a new target, you have to focus on that, and you might lose other things. Now, eventually, we might get to I think I saw some of the other commentators said that, when we get an architecture that functions at some level, and they were able to incrementally improve a couple of times, that's the time to pay attention. I suspect that's in the next decade, at least, before we even get to that benchmark. So, it's a real physics effect. The ultimate practical buildability of this, to me, it seems like an open question. But the simple way forward is to do what Blockstream Research and other people in the Bitcoin protocol and development space have been doing for the last year, is to work on a concrete post-quantum signature proposal for Bitcoin. So in 2021, Bitcoin added Schnorr signatures. I believe I was the first person to propose and chase people to say this is a good idea, we should do it, in 2013. So it took a little while to get there. But Blockstream has, did a lot of the active research on how to do Schnorr signatures, how to do MuSig, and is one of the active contributors to the libsecp library, which Bitcoin uses, and actually most other cryptos just copy it. So I think ultimately, Bitcoin will figure out what is a good trade-off, and the other coins will copy whatever Bitcoin does. And there is a straightforward path to becoming post-quantum secure or post-quantum ready much faster than the hardware can get there. It's much faster and easier to do the software research. We know roughly what to do. There's a NIST standard, which is a year and a half old at this point. We've, Jonas Nick put out a proposal with our research team on OpShrinks, which is Shrinks is a signature scheme that's an optimized version of the NIST standard. And we've implemented that in Liquid, Bitcoin Layer 2, developed by Blockstream. And lots of other researchers are looking at it. But however, if you look at the media, it looks like quantum is coming, the sky is falling.
Tomorrow.
Yeah. But that is because negative news sells, and people building things and building solutions get ignored. The reality is kind of the way around.
Yeah, no, exactly. And I mean, we're a bit short on time, but if anyone's interested in exploring this conversation further, Adam and I spoke about this at length at Paris Blockchain Week as well. So you can find that interview. And I guess the TLDR there is the risk is way further down the line than possible. The Bitcoin ecosystem is working very hard at producing quantum secure signatures and solutions that should be adopted by the ecosystem. And I think we can all say that we're pretty confident that the rate of change should be well before the threat becomes very real. But Adam, I just want to say thank you so much for your time. I don't want to hold up the stream, although I'm sure most people would sit here listening to us speak for another half an hour. There are other people on the program, but it's great to catch up with you. And thanks to the Binance team for having us online in this event.
Yeah, great talking with you.
how free are you? Think for a second. We tend to think we are, but are we really? These guys? What's yours? It's theirs. They control it. Your money, the fees, your data, and how you use it. Truth is, they own you. You and your story. Your hopes and dreams. Sad, right? But here's the good news. Welcome to Web3. Your story is yours and yours only. So go on, claim back what's yours.
Join me on Binance.
A huge thank you to Adam and Gareth there for the session and really looking at the history behind Bitcoin's architecture and really some of the core fundamentals from where we are to what is next in terms of Bitcoin and also the quantum avenue. Next up, we're going to take a look even further ahead into crypto utility, building everyday utility beyond trading. And this is with a representation from the Binance team. So I'm going to welcome to the stage Thomas, head of VIP of Fiat and Payments. So Thomas, great to have you here. How are you doing?
I'm good, thanks. Thanks for having me, Jessica.
Pleasure to have you. Thank you so much for joining. We are 3.5 hours into the Binance Online stream. So a lot of alpha has gone on underway. We've heard from Richard and E earlier on in the session on the 300 million to 3 billion users. And Thomas, we're bringing you on now to talk really about the everyday utility and how Binance is really building the architecture, the use case for that. So we're going to dive in because we've got 10 minutes to really hear from you on what you and the team are working for and also what it means for the users of the Binance applications. First, let's talk about Binance as a platform. I think for a lot of people that may hear the name Binance, a few years ago, it might have just represented a trading platform, but we've really scaled to so much more from that. It's now looking at broader payments, cards, transfers, and then real financial world utility. So I'd like to hear from you, Thomas. When you look at Binance today, what do you think have been some of the biggest shifts in how the company approaches financial services?
That's a really good place to start. So look, I think that obviously Binance has traditionally been a trading platform, but we've got a real opportunity here. And I'm fortunate enough because I actually work really at the coalface of this, of actually trying to bring it to life and make it reality, right? But we've got a real big opportunity here for Binance to move from being a trading platform into a broader financial services, everyday payments platform. And I think that we kind of have to stop thinking of crypto or Binance just being a crypto exchange. We're trying to think of it as a broader place where you can come experience day-to-day payment activities, financial services activities, have really simple, easy to use user experiences. And I'll talk a little bit more about that as we go through. And really kind of use crypto in your daily life to make payments, to pay, to kind of just do things that today you might use a payments company or a card or a bank for. Just do it all through Binance. That's kind of how we're looking at it. And there's a lot of detail there, which we're going to get into. But overall, we want there to be just a single platform. You can trade, sure, that's our core, that's our DNA. But also you can send money, you can pay your bills, you can use it to buy online, etc. And that's where we're going. And yeah, that's the fun part of my job is to bring all that to life.
Fun part of the job, probably the challenging part of the job too. But I think you're absolutely spot on. And when you referenced the old model, which was really like you have crypto, you kind of keep it separate, you work out what to do with it, and then you have your everyday financial neobanking. And now what we are seeing is a convergence between traditional finance and crypto from digital assets, and then this next wave of crypto adoption. When we talk about the barriers that we do face for crypto adoption and the kind of goal of 1 billion, 3 billion users on chain, people often feel like they are moving between these separate worlds, as you have just mentioned. There's traditional money on one side, and then if we look at the digital realms and ecosystems and the possibilities that are in the Web3 digital asset blockchain space, what does it take to bridge that gap? Because it sounds like it would be quite challenging to merge the two. But seamless user experience is obviously something that's so critical for your team's work here at Binance. So what does it take to build the two, in your opinion?
Yeah, and look, I think there is a perceived gap between TradFi, traditional payments, and crypto, but it's a perceived gap, which there doesn't have to be one, right? Look, at the end of the day, anyone in the world, to make a payment is a hygiene factor. No one goes out shopping and goes, oh, I'm really looking forward to going to make a payment today. People go out and they enjoy because they're going shopping, because they're going to buy something, or they're doing something fun in their lives. The payment at the end of it is literally the hygiene factor to end the transaction, right? So when we think of using crypto for payments, we've got to think of it the same way, to put our users' needs and at the very center of this, to break down all the little user frictions in the payments chain. My kind of background was originally in TradFi, and it's amazing how difficult it is to make a payment for something that should be very simple. I'm buying something from a merchant, they give me a good, they take my money in return. But it's amazing how often that goes wrong. Payments get stuck. There's lots of reasons your card gets declined or your payment gets declined, and then users get frustrated. When we use crypto payments, we've got an opportunity to completely break that down, to make it really seamless for users to use crypto in their day-to-day lives, whether they're buying something online, whether they're buying something in a store, or whether they're just sending their friends money or their family money, whatever it might be. We can make that as seamless as we possibly can and really make payments a hygiene factor. If we can do that, then the infrastructure behind payments, whether it's on traditional rails, whether it's on the blockchain, can be completely invisible to users and seamless. And that's how I believe kind of crypto can really dominate and really be the predominant way to pay over the next kind of 5-10 years, as we kind of drive this new way to use crypto in day-to-day lives.
Yeah, and absolutely, you have mentioned there using crypto in day-to-day life and a seamless manner in which you are doing so that anyone that is kind of crypto curious is able to spend their crypto. It doesn't have to be someone that really has high technical awareness. It kind of rolls nicely onto our next question. And for those that have been watching the stream throughout the day, they will have seen some rolling video clips and segments that we do have promoting the eligible users that can now spend $1 on Binance Card, alongside benefits like cashback incentives, zero fees, and zero FX. And this is a really significant campaign when it comes to just looking at spending in everyday lives, incentivizing a really seamless user experience as well. So I'd love for you to talk about the launch that we have seen today, what it means for Binance, but what it means for crypto payments and where they could be headed next.
Yeah, look, we're quite excited by this. This is a fun little campaign, right? So users will be able to use their Binance card, and if they use stablecoin, then they're going to pay zero conversion fee, they're going to pay zero FX, and they're going to get paid 15% cash back on their purchases, right? And that campaign's running until the end of May. Actually, the zero conversion and zero FX will run a little bit longer. The important thing about this is it's just bringing crypto into day-to-day spending, right? And it's really kind of highlighting the fact that you can use crypto to use your card to buy something online, to buy something in store, anywhere where you are in the world, right? So it's just a nice little proof point that crypto can be completely seamless and frictionless for users, right? They're using a card which they're used to using in day-to-day life, but it's just crypto that's funding it underneath. And obviously we want to give them a little incentive and reward to kind of try it for the first time and get some benefit from that. So it's kind of like a signal as well of bigger things to come. Stablecoins for me are not just for kind of trading or kind of for holding to storing value. We're actually using stablecoins now, and in this instance, a U stablecoin, to actually use it for day-to-day spending in kind of in day-to-day lives as well. So yeah, for me, this is a nice little initiative, a nice little promo, but we really hope it's going to really drive our users to kind of really get used to using their card in this way. But maybe kind of I touch on something else as well. Card's really important, but there's other things which we're doing as well to try to get day-to-day spending into mainstream users' lives as well. So last week we talked a little bit about national QR as well. So within Binance, with Binance Pay, we're also integrating into a number of national QR codes. So this is for in-store payments as well. So if I'm a user in Brazil, if I'm say a tourist that's visiting Vietnam, I can just like scan the national QR code, the QR in an in-store terminal. And then again, I'm just using my stablecoin sitting in my Binance app to be able to pay for something on an ongoing basis. So we're bringing, again, these kind of day-to-day experiences on how to pay in a really easy to use, simplistic way for users to experience for the first time. So there's the U campaign today, there's the QR one we announced last week, and there's more to come. So bringing payments to life is what we're trying to do here.
And certainly these activations, and you've mentioned different regions around the world that you are implementing from QR systems to different campaigns. It's also stable coins as well. And that is a use case and what that can bring to merchants and to individuals and businesses as well around the world. It's powerful. And I think it's one of the reasons why we're all in this space and we're all so passionate about it. You mentioned there are bigger things to come, and we did have Eon earlier on in the live stream, and she was talking about Binance's ambitious goal to go from our current 320 million users all the way up to 3 billion users, and what that looks like. And one of the main kind of whys for that is really to build a financial super app and to see the opportunities and the prosperous that brings to users around the world and the impact that will have on their lives. When it comes to the bigger picture of what are the kind of pieces that the Binance team and you and your team are working incredibly hard on doing that, what kind of pieces are Binance looking to bring to this financial super app to make this vision real and come to life?
Yeah, I mean, look, I think it's a great ambition, right, to move to like 3 billion users. And then so Yi's talked about that. Rich has been talking about financial inclusion as well. And this is all part of the same story, I think. But if we're going to move to Binance being a kind of super app where you can have a single app where you can do multiple different activities, you can, I think there's probably 3 areas which I can look at. You can use it to make payments by crypto in daily life. And we've talked about Binance Card, we talked about Binance Pay, right? You can use it to hold your funds with us. So you might get paid your salary. You might want to hold funds. Maybe you want to get some yield or reward in return for holding the funds. And then you can use it to like send funds as well, right? So if I want to remit funds to friends or family or overseas or wherever I want to send funds to, then these are some of the things which I'd want to be able to do within my super app. And I also want to be able to do that in multi-currency as well. So different people have different user experiences, but if I travel overseas, for example, I might want to have an account where I can hold different currencies so I can operate locally when I'm traveling. So there's lots of different user experiences which we want to give, but ultimately anything which you can do today, which today you use, say, your bank for, or you use a financial services provider for, or you use an app for. These are the type of services which the payments team, we're trying to build into Binance so that all Binance users can actually experience that themselves. I just add one thing though. What a user wants, or how a user pays for something in, say, Mexico is very different to how a user pays for something in, say, Vietnam or Australia or in Namibia in Africa. So the only way we're going to really be successful in this as well is really kind of driving into local needs of our users. And we need to deliver experiences which are relevant for our users wherever they are in the world, right? So we're going to take like a much more of kind of a localization or hyper-localization approach, where we really want our users to be able to really experience relevant payment experience for them where they are in the world, right? And so, yeah, this is what makes it very exciting, because we've got a lot of work to do that. But when we get this right, hopefully our 300 million plus users today and 3 billion users in the future will be able to kind of experience these day-to-day financial experiences, which we're going to be building.
Sure, watch this space. Well, a huge congratulations on the campaign going live today and the QR codes, as you mentioned, 2 weeks. And we'll keep our eyes posted for further updates from you and the team. Thomas, thank you so much for joining us today. Most appreciated and great to have you join us.
Thanks very much, Jessica.
Amazing. Well, great to hear from Thomas and the team there. So up next, we do have Ella Zhang, who's head of Easy Labs, and she'll be joined by Danush, CEO of The Block. The conversation is going to be one not to miss. We've heard a lot of conversations and thought leaders today really highlight that AI is a really key pillar for people to watch out for. So we'll be looking at bridging blockchain, AI, and the next wave of frontier tech in just a moment.
How free are you? Think for a second. We tend to think we are, but are we really? These guys? What's yours? It's theirs. They control it. Your money, the fees, your data, and how you use it. Truth is, they own you. You and your story. Your hopes and dreams. Sad, right? But here's the good news. Welcome to Web3. Your story is yours and yours only. So go on, claim back what's yours.
Hi, everyone. Hi, Ella. Can you hear me?
Hi.
Hi, Ella. There we go. Hi, Jessica.
Hi, okay, just checking you guys can hear us okay. Great to have you both here. Thank you so much. Ellie, you can hear us okay?
Yes, I can hear you both.
Okay, fantastic. Danush, thank you for joining. I will hand it over to you for the session with Ella.
Thank you so much, Jessica. Pleasure to be here. Hi, Ella. Nice to meet you.
Nice to meet you. Thanks for having me.
So, of course, it's a pleasure, and I'm really looking forward to this chat. We're going to be talking a little bit about the convergence of Web3, AI, and new technologies. And you've been around the block for quite some time, since 2018. I got into crypto quite early as well. Today, I'm the CEO, co-founder of a company called The Block. We are an ecosystem for tokenized assets out of Dubai. We're expanding to Abu Dhabi, and we have an office in Vienna and Austria as well, and looking to expand to New York as well. And the reason why we're really betting hard on tokenization is because we're really seeing the convergence between TradFi and DeFi happening now. And you've been co-founding Binance Labs since 2018. I don't think you really need an introduction because everyone in the space should already know you. But for those who don't, Ella co-founded Binance Labs back in 2018. And you guys had a lot of successful startups coming out of your cohorts like Polygon, Aptos, Layer Zero, and many, many others. And if you look back at the Ella back in 2018 versus the Ella now, what do you think you would have gotten wrong about where capital will be flowing back in 2026? Because in crypto, this is like looking hundreds of years into the future.
Wow, spicy question from the start. What got something wrong? Get back in 2018. So I will say that if we look at where we are today and looking back, 2018 we started our mission at Binance Labs to help the blockchain crypto community and ecosystem to grow to the global markets. So, but back then, our mindset is only crypto. Crypto is the biggest thing ever, and we only invest in crypto blockchain. I think that mindset is nothing wrong. But then if jump out today, we see other industries, especially like AI, is taking off with no doubt. If we're back then think more about a holistic way of how the new batch of the innovations happen historically, the biggest innovation and industrial change won't happen at a single domain when there's a new innovation. It's happened at the convergence with other readiness of the enablement infrastructure. For example, steam engine will combine with the railway to make the industrial economy happen, and electricity combined with the assembly line really make the mass production happen, right? So blockchain today actually and AI are enabling each other to become more and more powerful. We back then, if we can make more bets, visionary enough, I probably will invest in more NVIDIA, early AI bets. That's what my reflection.
Nice. And now at YZ, you have a broader mandate. What is really exciting you about this convergence? Is there any specific vertical within this Web3 AI convergence that you guys are specifically looking at?
At this convergence, yes, I think there are kind of two dimensions. Convergence, we first think of the TradFi and DeFi is really kind of coming to meet each other. Previously, we think DeFi is disrupting TradFi, and also E and CZ, we kind of discussed a lot, there's really not such thing happen, right? It's TradFi and DeFi. They both have their advantages and the legacies, and they have their properties coming to enable each other, where we can see the traditional stock is going to on-chain, and the crypto digital treasury asset are going to be adopted on the traditional market in DAT in those companies like MicroStrategy. So the people who trade usually in the TradFi, in the traditional stock market, or people only trade on chain, are buying asset both sides. And we're seeing stablecoin is really going to, thanks to Genius Act, and going to mainstream. And especially in those frontier markets, we can see over 50% of the penetration in the country of the stablecoin adoption. And there's another layer of convergence that we see the technology like AI, biology, and blockchain are converge to enable each other. For example, AI agents nowadays is getting more powerful, but it's not with the only purely with the intelligence is not enough. It need to execute, it need to transact, it need to own assets, and need to gain the trust. This is where blockchain came in to empower AI at agentic AI era. At the same time, AI really helped blockchain crypto to solve the usability issue, where to majority of the people, crypto is still very vague and quite complex in terms of use. But AI turned the interaction of interface with the protocol, with the wallet, into intent base. Instead, users and agents, you just need to tell AI that's what we want, and AI handles execution. So over time, we can see blockchain gradually become the invisible layer to ensure a lot of identity, incentives layer, and ownership, versus AI become the interface layer to enable the usage. That's the amazing convergence we're seeing happening.
So I know that Binance is really, going big on the agentic AI and how money interacts with these AI agents. Even CZ, he went out and said that he essentially sees the BNB chain becoming the money for the AI agents. And he also said that credit cards don't have an API, which I find quite, it was a brilliant statement. So we do see this shift. Now, if we kind of go back to what you said earlier, that money is flowing into tokenized products, so institutional money is now moving more into tokenized products like T-bills, equities, etc., tokenized equities. Then you also have another aspect, which is the DeFi element. And also you mentioned the settlements. And now we also have the AI agents. Out of these four buckets, which one would you kind of pinpoint to say, this one I really believe is going to be the next big thing for this year?
Yeah, obviously, agentic payment is taking off, get the adoption. I think this really starts from, you talk about how Binance and BNB Chain ecosystem, Easy Labs, were adopting agentic AI as a holistic view. This started mid of last year. Easy Labs started to invest in AI biotech as an expanded mandate from the beginning of 2025. And everyone is moving very fast to learn the new technologies. And CZ is really the visionary. I still remember early last year, he already write down a mind map where he thinks AI going to disrupt, going to change Binance and BNB Chain. And there are 20, 30 items. And I still remember that he said, how people trade crypto will be different. The UI UX of Binance and on-chain apps, DApps, will be completely changed. And this is happening now. We're seeing the how the willing base, the intent base decision making by AI agents. You actually don't need any interface. That's where we're seeing AI is so powerful to empower blockchain crypto. at the same time, the payment, how to make the payment permissionless and trustable, how to make users really trust their agents. Blockchain come the exfo to all those kind of the protocols are ensure that the AI have the identity, have the wallet, have the ownership of piece of your assets, which enable the agent can execute for you. And also there's another layer where we see the ownership happen, and data is something really lack in advancing AI. No matter in LLM or physical AI or in biology, there's a need a lot of data, personal data, to train the AI model to be next level, and it's very sensitive. And blockchain based ZK knowledge proof, those technology will ensure that your data be shared for the training, but not reveal your identity. At the same time, you probably will get piece of the network economy because of the data ownership. So that incentive of blockchain enable ownership incentive and security, verifiable identity. Make AI will empower AI to be more powerful. That's the area we invest a lot of time seeking for the next generation innovation and applications happen.
So that's a very interesting point, and you sit on quite an interesting position, heading Easy Labs. You get access to a lot of these new technologies that you're privileged to see before everyone else kind of get to see what's happening on the markets. Now, you guys have also made some very interesting bets on Vana, TensorPlex, Video Tutor, where AI is converging with blockchain. Where would you say these kind of convergences are kind of noise, and where do you see it's actually working, these combinations, and where do you see, in crypto we always say there's a lot of products with a solution looking for a problem. So if you can distinguish between those two, where do you see that the actual convergence is meaningful and valuable for the products and companies that people are building?
Yeah, good question. So where we see, we actually mentioned quite some applications and usability of where we see it's actually working, where it's the incentive layer, the ownership layer, the identity layer, where blockchain really kind of make it work at the convergence with AI. Where we see it's a little bit maybe a little bit further away or not completely working or not working so effectively is, for example, the AI training. The LLM training, people want to put it on chain in a decentralized way. However, we're seeing the whole world building the data center and training the model in the centralized way. We're still seeing that that usability is not there yet, and the training inferencing in the centralized way is still the mainstream for today, at least.
We also discussed before, tokenization, and I know that this is something that recently has become quite a hot topic for Easy Labs, also for CZ. He recently at Davos, he mentioned that Binance is in talks with at least 12 different governments on tokenizing the national assets. Now, you guys also took a bet on Plume, which that was your first kind of real, I believe, RWA bet. What do you really believe that 2026 is the year where tokenized assets will be taken off, or are we still a few years ahead, or is it still kind of a pipe dream?
Oh yeah, we definitely see a very clear signal that tokenized real world asset is happening now, and we believe this is a probably very important catalyst for a crypto to go mainstream. You can see the transaction volume of the tokenized stock is already taken off gained the traction on Ondo, on Binance, on some other exchanges as well. At the same time, we see the demand of IPO stock actually kind of going to be traded on chain in a decentralized manner, especially for people who don't have the access to buy pre-IPO, because it's a private market. Not everyone have the privilege to access even to the secondary shares. So that's where demand, people will kind of want to buy tokenized SpaceX, tokenized OpenAI, those pre-IPO stock. And at the same time, so Plume is the first batch of the RWA portfolios. In our incubation, we also incubated projects focused on early startup ownership. They make their equity, tokenized equity, to be owned by the community. So we're really seeing those valuable assets is moving online. Not only treasury, as a long kind of we have where last year happened a long time, but also other type of credits, the treasury, the sovereign credit, the real estate title. Those really valuable assets are gradually moving on chain. This is definitely the trend we see.
Amazing. And you know, we here at the block, we're also sitting in Dubai, and our ecosystem is built around tokenization and helping companies. And we see a lot of these projects coming on that want to tokenize assets. What would you say is still the challenge or the problem that hasn't really been solved for in order for these assets to really take off?
Yeah, good question. I think one major challenge we see is the custody solution for the tokenized stock and for the equity, even for the real estate titles to be put on chain. How to build the trustless custody solution for people to really understand they have a piece of something really valuable tied to that that asset is where we see is have some gap, and a lot of entrepreneurs in trying to solve that problem. And also liquidity, because the assets are so diverse, right? You always, in order to enable the trading, you always need enough liquidity to make the transaction happen, and how to make the liquidity pool effective enough to support the very diverse asset class to be traded on chain is another problems we're seeing founders are very interested in and trying to solve. And also probably some kind of follow-up issues. For example, we're seeing issues like pre-IPO stock. They be trained, and when they go to IPO, the private market ownership will be liquidated at the liquidation event. And how to make that transaction happen when the pre-IPO stock can go to a bigger liquidity pool on NASDAQ or New York exchange, and that kind of price gap will be smooth. So those kind of some very interesting problems we're seeing, never thought about.
Amazing, Ella. We need to wrap up. We're starting to reach the end of this conversation. Just one final question, if you can keep it really short. You know, what is one contrarian bet that you would make for this or the next 2-3 years that you think if you made that bet, crypto Twitter would be mocking you?
Yeah, I've been thought about this. I think previously our mindset is everything gonna be issue a token, and everything Web3 will be tied with tokenomics. And now when we see the convergence, we see blockchain is really powerful technology, and it will enable a lot of other technology happen at the same time. Not necessarily everything need to issue a token. Instead, blockchain, crypto gonna become the very powerful enablement layer plug into our daily life, institution adoption. Not my bet is not the very valuable crypto and blockchain company for the next, not necessarily have a token. They can have a tokenized equity, but then they can only have the equity, and we will see more and more blockchain crypto company go to IPO in the traditional stock market, not necessarily have to issue a token. We're seeing the convergence from TradFi to DeFi.
Amazing. And I think that's a perfect answer to finish this conversation. Thank you so much, Ella, for joining us today. It was a true pleasure, and I hope to see you in Dubai. We're neighbors, by the way. We're on the same street.
Nice. Look forward to meet you in the future.
Likewise.
Fantastic. Well, thank you both. And a huge thank you to everyone that is still tuning in over the time. So we are now at our final session of the Binance Online. A huge thank you to everyone that has stayed with us over the course of the last 4 hours across X, YouTube, and Binance Square. So first of all, a little bit of housekeeping and a reminder, it is our final red packet giveaway on the next panel. As we did mention at the start of the stream, the price increases for the red packet giveaways are increasing throughout the day. So this will be the highest red packet giveaway throughout the Binance Online. So do keep your eyes peeled for the next session. Now, taking a look at our finale conversation for the day, we've had a range of topics from AI to stablecoins to RWAs and integrations, and the future does look incredibly promising. One thing that we're really focusing and honing in on across Binance Online is the seamless integration of tokenization. And BlackRock is an organization that is really leading the institutional adoption of assets, tokenizations, and really viewing it as the next generation of financial markets. Now, the core premise of tokenization is making financial products easier to access, to transfer, to use, and to settle. So after the break, we're going to have BlackRock's Chief Operating Officer, Rob Goldstein, joined by Binance's Chief Financial Officer, Kaiser Ng.
How free are you? Think for a second. We tend to think we are, but are we really? These guys? What's yours? It's theirs. They control it. Your money, the fees, your data, and how you use it. Truth is, they own you. You and your story. Your hopes and dreams. Sad, right? But here's the good news. Welcome to Web3. Your story is yours and yours only. So go on, claim back what's yours.
Good day, everybody, and welcome to the finale session. I'm Kaiser Ng. For the next 20 minutes or so, we'll be talking about tokenization and capital markets. And joining me today is our special guest, Rob Goldstein. Rob, of course, is the COO of BlackRock, the world's largest asset management company with over 14 trillion AUM. It's an absolute pleasure to have you on, Rob.
Kaiser, great. Thank you for having me here. And it's always great to see you, even if remotely.
Always. This is actually the second time you're speaking at a Binance event.
Yeah,
Awesome.
I wish this could be live, but yeah. I guess that we had to do it remotely this time around. Next year, maybe we could do it live again.
Let's do it. Awesome. Cool. So let's just jump right in. Rob, we continue to see BlackRock making big strides in digital assets. You launched Budo on the BNB Smart Chain. Budo is now accepted as a trading collateral for Binance users. And you are launching a new Bitcoin income fund that will generate yield in addition to price appreciation. There are many more, but I won't belabor the point. But I'm interested to know, through BlackRock's efforts to push digital assets and tokenization, what has been the most significant for the organization? And, how has that shaped your strategy in digital assets?
Sure. And Kaiser, to a large degree, I think that what we discussed last year continues to be the defining theme through our lens, which is really about clients wanting these exposures within their whole portfolios. And there's a lot of tickers that we've created to help accomplish that. But I think more importantly is that aggregate whole portfolio theme. And what we continue to see and what we continue to be excited about is more and more clients, particularly in a world where building a portfolio is getting more complicated, figuring out how to diversify within a portfolio is getting more complicated. We're seeing more and more clients start to think about digital assets as an important component of their existing portfolio and looking for different tools to actually accomplish that. Simultaneously, we continue to be very excited. You spoke about tokenization. We continue to be very excited about the ability to provide capital markets exposures in a better, faster, cheaper way through digital rails as tokens. And I think one of the things that if you ask the leadership of BlackRock, if you said, just raise your hand if you believe that the amount of wealth stored in digital wallets is going to go up, I think everyone would raise their hand, which is why it's so important to make these capital markets exposures available as tokens that could be in those wallets. And if you ask them the question of, are clients in more traditional finance, are clients within the capital markets going to increasingly want digital assets exposures in their whole portfolios, I think everyone would also raise their hand. So it's both sides of that bridge that are exciting to us, more so than any individual ticker. It's actually filling a puzzle and putting the puzzle together that really gets us excited.
Right. Speaking of covering both sides of the bridge, when I think of crypto ETFs like IBIT, it provides easy access to digital assets in a traditional wrapper, like I can get crypto exposure through my bank or broker. And when I think of BUTO, it provides access to traditional money market funds in a digital assets through tokenization. But can you tell us a little bit more about how BlackRock is bridging TradFi and DeFi?
Yeah, and it's interesting, Kaiser, because I think that people want this to be very binary. Either you live in one world or you live in the other world. We don't see it that way. We see it as choice and we see it as access. And for certain types of clients, they're going to want the ability to manage their portfolios through traditional custody, brokerage, and other rails. They still need those digital asset exposures. And then certain types of clients, and obviously the Binance network is an incredible case study here. Certain types of clients are going to want to manage their portfolio more in this alternate universe of digital wallets.
Right.
Our strategy from the beginning has been very, very, very simple. By the way, very hard to execute. I don't want to take anything away from what we've accomplished, but a very simple strategy, which is to effectively be that bridge between the capital markets and this alternate universe, to provide in a BlackRock quality way digital assets exposures in the capital markets, and to provide in a BlackRock quality way as tokens capital markets exposures in this alternate digital asset universe. BUTO is an example of digital assets as tokens from capital markets, and IBIT as an example of digital assets as traditional ETFs within the capital markets.
Right. And I think when you guys and other companies launched the Bitcoin ETFs, it really has helped increase the crypto pie, which was growing, but not as quickly. And suddenly we saw the leap. So, definitely.
And Kaiser, if I could just add to that, I think we and the world were surprised how much pent-up demand there was for digital assets within the capital markets. And we shouldn't underestimate having those exposures within the capital markets provides a lot of utility to people, certain utility with regard to borrowing and lending, certain utility with regard to just simplicity if it's on your brokerage statement, capabilities with regard to estate planning. So I think the world was surprised with regard to how much demand there was. Part of our vision is we believe there's a like opportunity and something that we're working on. It's very complicated, requires a lot of regulatory, operational, ecosystem, and other evolutions. But we think there would be like demand for just a broader suite of capital markets ETFs within digital wallets and that digital asset alternative universe, if that could ultimately be figured out.
Right, for sure. I just wanted to add that I think you talked about the BlackRock name and making it a BlackRock quality product really helped propel that. And there's a reason why IBIT is the leading Bitcoin ETF. So great. I want to actually reference something that Larry Fink said. He said tokenization is at the center of BlackRock's 2026 vision. It's like the internet back in 1996, which I think many of us would agree with. We are seeing such rapid growth in RWA and tokenization across many different industry sectors, right? Especially financial services. How are you seeing the growth of RWA tokenization, and what does that mean for the future of capital markets?
Sure. As a starting point, we have to recognize that tokenization of capital markets instruments is still quite nascent.
Very.
So it's just at the starting point. Therefore, and part of the reason I highlight that, I think the growth opportunity for the next several years is really to be thinking in multiples as opposed to percentages, because it is so nascent. We feel there is a great value proposition that tokenization provides relative to some existing structures, particularly with regard to the fund ecosystem. And when we think about just opportunities, we're always thinking within BlackRock, how do we make access better, faster, cheaper for clients and end clients? And there's a lot of capital markets ecosystem opportunities, particularly with regard to funds, transfer agency, those concepts that today have a lot of inefficiency embedded within them that could be attacked through these better, faster, cheaper opportunities of tokenization. But if you take two steps back, and I think this is a very important point, a lot of these conversations get very religious very quickly, and people are so passionate. We look at it a little differently, which is this is just technology. Digital assets has a lot of energy and religion associated with it. But at the end of the day, it's a new technology. And that new technology enables new value propositions. That new technology enables new product innovation. That new technology provides more choice to end clients. And if you can remove the religion from it, the new technology element is definitely something that provides opportunity to attack existing inefficiencies and just deliver better, faster, cheaper value propositions to clients. Where Larry and I was recently being interviewed and someone asked, like, what do Larry and I disagree on? And the reality is we agree on a lot, but even in what we agree with, often we will have different perspectives of timeframes.
Sure.
I believe this provides an opportunity, tokenization provides an opportunity for multiple growth, 3x, 5x, growth rates like that for many, many, many years. But that will still be a small minority of the traditional financial capital markets infrastructure.
Absolutely.
So there's plenty of opportunity from both sides here.
Right. I think if we look at the total tokenized assets, we're talking about 30 billion. So you're absolutely right. We're not even at the first inning, very nascent, and this is the opportunity.
But I think, Kaiser, what's so exciting about it is you can have very high conviction that the amount of just money and value stored in digital wallets will continue to increase.
Yeah.
And if you believe that 30 billion or whatever the exact number is today, it's something in that category, that number can go up multiples for a long period of time.
100%. Yeah, there's no question about that. And that's what we build. That's why we're excited about this space. Fantastic.
And I do think Binance plays an important role here in helping to really provide that better, faster, cheaper value proposition. Because at the end of the day, technology needs to be properly implemented and technology needs to be properly explained to people. And Binance is going to play such an important role in that.
Yeah, for sure. I mean, you hit it on the head. Is better, faster, cheaper with better technology is exactly what we take pride on. So, bang on. Cool. Well, moving on to a topic that perhaps a lot of people are interested in. If we think forward to the next wave of crypto adoption by institutions, whenever that happens, right? In your view, what are the key challenges that needs to be resolved before we will see institutional adoption at scale? And are there any milestones or indicators that you would watch out for?
Absolutely. The first element of crypto adoption among institutions, in my opinion, very simply, is education. Notwithstanding how many smart people there are in this ecosystem who really understand all the nuances, the majority of institutions still do not understand what crypto is, what opportunity it provides, and the role it could play within portfolios. More and more, I think you're seeing organizations like BlackRock and other large financial institutions, wealth managers, asset managers, banks, trying to explain it to clients and going through that education process, which takes a period of time. I also feel like crypto is living more and more through these different journeys that are quite typical. Although everything is happening faster, I think these journeys are quite typical of new assets, where you see more and more there's a flight to quality of what crypto actually means. So there's an interpretation of crypto which is this wide, and there's an interpretation of crypto as a key technology that's more like this wide. And I think most of the institutions are focused here as opposed to here. So I think part of it is just time, education, liquidity, and having more and more of a track record as Bitcoin in particular, and a ticker like IBIT, more and more is being put within model portfolios. having more of an operating track record around the role that Bitcoin could play within these whole portfolios. It's a very natural cycle that as time goes on, as people get more educated, it'll enter more and more model portfolios. There'll be more and more of a track record, and the portfolio utility, the diversification utility, will become more and more clear to institutions. We continue within BlackRock to see digital assets as a topic that many clients care about. And my gut, I haven't done this math, but my gut is if we had a word cloud of every client conversation that we're having, I think Bitcoin in particular, digital assets, would be a fairly big word in the word cloud.
Yeah.
But if we then analyze the words in the word cloud between the size of the font relative to the number of organizations and the number of advisors that are currently engaged with the topic, with the word, I think Bitcoin in particular, digital assets, would probably have the largest font relative to the absolute number of people currently participating. And what's so exciting is that it's so early that the opportunity set seems very asymmetrically skewed upwards.
Yeah. Makes sense. I think a lot of companies sometimes focus so much on innovation and products, but it is education that I think we need to do more of. You mentioned something I want to go back to, which is, again, on education. Your clients, when they come to you and ask about exposure to digital assets, are they usually already educated on digital asset, or are they looking for that from you? Is there a trend that you're seeing?
It's an interesting question. And the answer, I think, is sort of, in that it's not uncommon that within a team, because when we talk about clients, we have very few clients that are one individual. They're normally teams of people, organizations, groups. So when you think of it through the lens of a team of people, quite often you have a couple of people who are very educated and very supportive, and they've been trying to help educate everyone else within their team. And quite often the role we play is twofold. One is validating a lot of what those people are sharing. And two is often, how do you take these concepts and apply them within that whole portfolio construct? Because I think it's a very different exercise. And keep in mind, most of our clients at BlackRock, in some way, the money they're entrusting us with is for a longer objective. And the majority of the assets that we've been entrusted with are actually helping people save for their retirements.
Yes.
So it's not just, is this a good idea standalone? It's, is this a good idea? And if so, what role does it play in my portfolio? Recognizing that my portfolio is being designed to help me achieve an outcome. And that bridge between, like, how do I take a collection of good ideas and have them achieve an outcome is a role more and more that we find is becoming more complicated, not more simple. A role more and more that BlackRock is being asked and entrusted by our clients to play.
Yeah, I sense that was the case. Thanks for that. From our perspective, Binance, having the opportunity to do something with BlackRock has been exciting and inspiring. Now, you've been at BlackRock for over 30 years now, so you really have seen it all. I just want to know, from your lens, what are you most excited about the convergence of digital asset and traditional finance?
I'm going to answer the question slightly differently.
All right.
Which is what I'm most excited about with regard to digital assets. I think we are living in a unique moment right now with regard to technology. And when you look at the AI capabilities that are defining so much in society, so much in the economy, we're living through this period where capital, technology, and national security in many ways are sort of colliding and converging. What's so exciting to me is when you look at this artificial intelligence technology, which for all intents and purposes is like we found alien technology on Earth. So much of it, I believe, is the other side of the coin of digital assets. And I think they are going to amplify each other in ways that we have yet to fully understand. Mm-hmm. But for example, if you have a world where companies, in addition to human employees, have agents that are doing things for them, when those agents need to transact, they're not going to log into a bank account at some bank in the United States. They're going to be on digital rails, leveraging this technology, and they're going to be effectively providing an opportunity to really take the digital rails that have been built today and use them in a whole new way that's going to wind up, in my opinion, that's going to wind up creating exponential growth with regard to digital assets and is going to create exponential growth with regard to the ability to use the agents to do more.
Yeah.
And to me, that's so exciting. I wish I was both smart enough and eloquent enough to be able to perfectly explain how I think it's going to work. I can't, but I know, I have high conviction that what's happening with AI is going to be a force multiplier with regard to digital assets, and digital assets are going to be a key enabler for AI adoption, particularly at an enterprise level.
Yeah, actually, I think about this a lot too. Probably a topic for another day, which is the convergence of AI, agents, stablecoin payments, and agentic wallets. Fantastic. Awesome. Well, Rob, thanks for that. With that, we're actually up on time. Always a pleasure speaking with you.
Great.
And we're both very clearly excited about the future of what tokenization is going to bring. And just appreciate you as always. Thanks for coming on again, Rob.
Great. It's always great to see you, Kaiser. Thank you all.
Well, we have broke some records today in terms of how many people have joined us during Binance Online, in terms of how long the live stream is. We're currently at 4 hours and 40 minutes. So a huge thank you to everyone that's joined us. But also in regards to Binance Square, how many tips we've received. So we quickly had a call with the Binance Square team while Kaiser and Rob were speaking. And we have over 5 BNB that we can give back to you all in red packets. So as a huge thank you to everyone that's joining, the tips that we've received throughout the live stream are going back to you, back to the community. We have over 3,500 red packets to claim in the next 2 minutes that are now live. So if you are listening in on Binance Square, do keep an eye out and make sure to redeem them. And a huge thank you to everyone that stayed with us throughout the day, wherever you've been joining from in the world. It has been such a pleasure to share some of these conversations with you. We've heard from E and Richard on the road to 3 billion users. We've heard from Chamath, CZ and Anthony Pompliano on AI and tokenization. And then obviously from Rob and from Kaiser on capitalizing the future of tokenized markets and what that means for the future of digital assets, traditional finance, and so much more besides. We've heard from Bitcoin and cryptocurrency legends, Adam Back, Brad Garlinghouse, Lily Liu from Solana, and then from the research teams at Masari, CoinMarketCap, and DeFi Llama. It has been a jam-packed day. I cannot thank you all enough. Our Binance Angels, community members, anyone that's mentioned on X and tagged that you've been watching from around the world. We see all the comments and we love hearing how much you've enjoyed the day and also how you found it. So let us know in the comments. I think you've heard enough of me speaking today. So that's all for today. Thank you so much for being part of Binance Online, and we can't wait to see you